Great. Good evening. I'd like to welcome you guys to our seventh podcast. My name is Paul Barron. I'm the broker of record from Century 21 Leading Edge. And tonight we've got two very, very special guests. So I'll let Shubha and Kendall introduce themselves. So go ahead, Shubha.
Thank you so much for having us here, Paul. As Paul mentioned, my name is Shubha Dasgupta. I'm one of the co-founders of Capital Lending Center. I'm a mortgage brokerage based out of the GTA.
Well, if Shubha's the co-founder, I'm the other co. We'll leave it there, and pretty much the same thing, Kendall Marion. Thanks for having us.
Great.
Excellent. I'm Tasis Giannakakis. I'm also one of the owners at Century 21 Leading Edge.
Anthony Bungaro, a broker and one of the owners at Century 21 Leading Edge.
You guys should know who we are anyway, right? We've been introducing ourselves every week. So I'm going to start by just giving a little bit of an overview of the wine tonight, guys. So for the most part, when we've done our wine, we've tasted multiple brands and years of the same types of wines or the same region. Tonight, we're doing a completely different scenario. So tonight, we're actually going to start. The first wine that we've got here is a Pinot Noir, and right here, this bottle. And this is a Burgundy, and it's the Pinot Noir grape. And we're going to actually taste some very, very light wines and then move up like we do at a lot of our tournaments and things, where we move up from the lighter wines to the heavier wines and really look at tasting, you know, the difference between a Pinot Noir. I think the second one we have is Rioja, and then we're going to go with Brunello di Montalcino, which is a Sangiovese grape, and then we're going to go with a Cabernet, which is, I think, is a Chilean wine, Cabernet wine. And then, of course, my favorite region is the Châteauneuf-du-Pape. So we're going to have a Châteauneuf-du-Pape, which is Syrah and a few blends of grapes as the last wine. So what we do, guys, is let's start with a little cheers and have a taste. Cheers, guys.
Cheers, gentlemen. Cheers. It's like a world tour here without leaving the office.
There's no quiz at the end of this, right?
Cheers. What's that?
There's no quiz at the end of this, I hope.
There's no quiz, yeah. So we're gonna normally with Taff and Anthony, we do a blind tasting, right? So we don't see what they are. Then you've got to guess the grape, the year, and the variety.
Okay.
Okay, but we won't do that.
Yeah, please, no.
You think we could do that? No, we can do
Is
that.
it multiple choice at least?
I'm about to run out of the room.
I'm just lucky that he gave us the outlook of what we're doing now, right? So at least, you know, we're always a little bit paranoid that Paul's going to ask us, okay, which wine did you like? And if we pick the wrong one, then you feel a little bit foolish, right? But now we kind of know that it's just different grapes in different regions.
Yeah,
so.
and it's actually interesting because when you are having wine at an event or going out for dinner, you don't usually try a bunch of different wines. That's why tastings are really neat, to taste what does a Pinot taste like compared to Brunello, and look at that difference, right?
Yeah.
And you know, it's a great way to try, you know, different things and see what you really like.
Absolutely.
Right?
Yeah.
So let's talk a little bit of real estate. We'll delve into some of the more wines after, but let's start with real estate. What's happening in the market, boys? And we'll also, I think, tonight look at getting a view of the market and a lot of the questions that we talk about from the mortgage side of things.
Absolutely.
Yep.
I'd love
Okay.
to.
Yep.
So what's going on in the market, guys?
Well, I think that part of the reason we have you guys here as well is I think the last couple of conversations we had, when Paul would ask us that question, we'd say that financing seemed to be one of the biggest challenges, right? With the changes that have happened in the last year, the more stringent rules on getting financed. Now, I think that has leveled off to a certain degree because people have adjusted to it. They know that, hey, it's not as easy to get the financing as it used to be. So this is what we need to fall into in order to get that finance. So I think it's the agents understand it better, the real estate agents, that is.
Right.
And they're communicating that to their clients to say, hey, you know, this is how you used to get qualified, or this is what you needed to get qualified for this type of house that you want to buy, but this is now what you need to qualify, right?
Yeah.
So I think that that's smoothening out, but I think we'll also get you guys to chat with us a little bit about that. right?
Absolutely, and I think that, and you guys all know this, that we've been talking about it for months. You know, when any change is introduced to any industry, regardless of real estate in the mortgage finance world or whatever industry it may be, there's always a little bit of an adoption period or an adaptation period where it takes
And some
time.
panic too.
And some
Starts
panic.
with a
Yeah,
panic.
for sure.
It starts with the panic. Everyone gets a little nervous,
Yeah.
runs around. The sky is falling. Market's going to crash. And then what happens is you go into this period where it has to be digested.
Yeah.
And it took a little bit longer than this time. You know, there's been quite a few mortgage rule changes over the last decade. This one's been by far the largest impact-wise on the consumer and the most direct facing to the consumer. So it's taken a little bit of time to for the consumer to adopt to it and adapt to those changes. But a few months later now, you know, these changes were introduced in January. Now being into October, we're seeing that begin to normalize. And we're seeing them more comfortable with it. They understand the stress test a little bit better. The level of fear and anxiety that Kendall was speaking about, which is you know very common in these cases, has really passed us right now. And now they're coming in with a more logical head and just better prepared to make a real estate decision.
Well, I would add to that. I think it's also it's not the clients, it's also the mortgage agents. There was a period in time where even for them it was difficult to there's so many different places where a client could fit, products had changed, even the way we describe products had changed. So I think there was a learning curve for mortgage agents as well. And as we've seen them adopt, they're better. It's easier for them to explain it to a client.
Absolutely,
right?
you know,
I think they were struggling at first with.
But I'm sorry.
Yeah, go ahead.
I was going to say I like what you're saying, and it's not that I don't like anything, but the reason I like what you're saying is that seems to be quite parallel with the real estate.
Right.
Because with the real estate business, we could sort of say the same type of thing, that once the agents start to understand the newer ways of doing business, whatever, it's quite consistent with what you're saying. And my guess, and I don't know if you feel this way, are your amount of transactions quite similar to ours? So, for example, our sales have been very consistent
Right.
lately, you know, and we use the comparables to last year and the comparables month to month. But are you finding that the amount of transactions are consistent with our sales, or is it a different planet altogether in terms of sales?
You know, it's a great question, Anthony, and to be honest, you know, we dive deep into the stats every month to make sure that, you know, we're making the right decisions and informing our consumers correctly. July, August, and September have all been record months, and not record months meaning record months as of 2018. We're talking record months period
Right.
in terms of numbers of transactions and mortgage volumes have originated across Canada, right? So they've been, you know, high growth months, which really show to us that consumer confidence has returned. You know, Kendall is absolutely right. Education and information has been critical over this last year. You know, staying on top of policies changes, staying on top of all of these new rule changes. You know, they weren't just consumer facing, they were back end as well. So a mortgage agent today had to re-educate themselves. You know, we're not the same mortgage agents that we were even a year ago. And the ones that were able to grow and evolve and educate themselves, you know, are definitely seeing that, you know, the fruits of that translating over into their business.
Yeah, I think it breeds opportunity in real estate mortgages in general. You have to be an expert, right? And this is which for us and what we've trained our agents on is it breeds opportunity, where other brokerages, competitors have said the sky is falling and this is terrible. We actually thought it was a phenomenal thing because clients have major confusion. They need an expert to help guide them through this process, help them find the right product that works for them. And you know, I think this more difficult climate in terms of education is just opportunity for all of us.
I think even the lingo, Kendall, when you said stuck with me was the whole insurable and non-insurable. Like that lingo really means something different now than it used to, right?
They weren't even words that we used prior to January
for sure.
1st, right?
Yeah, for sure,
Exactly.
right?
Yeah.
So maybe tell us, you know, describe that a little bit, Shua, because I think a lot of people are
Uninsured,
still,
insurable, yeah.
the insured
different
and
lingo.
non-insured, right?
Oh, absolutely. So, I mean, you know, let's talk pre-January 1st, 2018. You know, there
We're
was
just trying to make it really confusing.
trying to
now.
make it really confusing, right? So there's two main terms in the mortgage world. We used to talk high ratio and we used to talk
Yes.
conventional. right? And for the viewers that you need a little bit of clarification on that, high ratio was any borrowers that were putting less than 20% down and their mortgages were required to be insured by one of the three national insurers, CMHC, Genworth, or AG, and CG, and conventional was anybody putting 20% or more down, right? Today we have three terms that have been reintroduced or introduced, and those two removed. Now we have insured, which replaced high ratio, meaning that you're an insured mortgage, less than 20% down. There's insurable, meaning that if you put 20% down or more, yet you still fit the criteria of an insured mortgage, and there's quite a few criteria you have to meet: 25-year amortization, less than $1 million, owner-occupied, etc. And then you have what we call uninsurable, and that means that it fits outside the guidelines of the insurers. And each three of those categories are brand new. Each three of them have different criteria, different eligibility, and most importantly, guys, different interest rates. And I think that's where
I was gonna actually say to you, let's keep it going and talk about how explain how this impacts the actual interest rates and why.
Yeah, so I mean, interest rates before, and the question was always, and the question we always get is always, what's the best interest rate, right?
Yeah.
And one of the things that I love to say now is there is no answer to the best interest rate anymore, because depending on so many variables, so many factors, so many criteria, and into what category or bucket a customer may fall into, that could impact or change their interest rate. Now, one of the big things that happened, and where Kendall was alluding to into the market, that wasn't consumer facing but happened more on the back end, was the way that banks raise capital, the way that mortgage lenders raise capital. So in the past, the mortgage lenders used to raise capital through what we called the MBS market, the mortgage-backed securities market. And this was an easy way for them to access very low-cost funds. Part of the criteria of raising capital in the MBS market was that all of those mortgages were insured by one of the insurers. Bulk insured, as you may have heard that term to be. So regardless of whether you're putting 20% or less down or 20% or more, those mortgages were all insured, reducing the cost of capital to the banks, and sold off in portfolios.
Right.
Now, what's happened with this uninsurable category is that's raised the cost of capital to the banks. And essentially, they're passing on that cost to the consumer. So now if you don't meet that insured criteria, if you need a 30-year amortization, if you're buying a rental property, a property over $1 million, or one of these other factors, you're paying a higher interest rate. And it's very interesting. Sorry,
go ahead. No, go for it.
The last point I was going to make was the very interesting part about that, and something that actually hasn't yet gotten fully to the consumer yet, slowly getting there education-wise, is that if you put less than 20% down today, you're actually getting a better interest rate than some people who are putting 50% down or 60% down.
It kind of seems odd.
Very difficult,
And
right?
it's
Very difficult, but it's all cost of capital.
And that's where I was going to jump in, and that has been a challenge for us, is explaining that most clients have a hard time wrapping their heads around this.
Yeah.
What do you mean? I'm putting down this much money,
can't give
and
me a
you're
better
telling
rate.
me that I pay more, right?
Now, is that not because they're putting down more money, but because they're not insurable? Is that why?
That's exactly
becomes
what
yes,
it
it
is.
becomes an
So it's
uninsurable.
not a question of how much they're putting down.
You got it.
It's because they're not insurable. Therefore,
Yes.
it's a higher rate.
And that's why
100%.
we have the new phrase of insurable instead
And-
of insured, not insured.
And this is why you have to go through this entire education lesson, because Paul, clarifying that is fantastic, because that's the problem.
Right,
All they see is just one aspect, one layer. I put down more money, I pay more.
right.
Not, well, we can get some criteria and turn this into an insurable and reduce the rate. So there's so many facets for us to play with now to try and get these products to work for the client.
So
Right.
funny that our agents now, when they give assessments to clients and when they're working with your fabulous realtors and they're working on, pre-approvals or what can this potential client afford, what their affordability is and qualifications, used to be pretty straightforward. Not that straightforward, but I mean, we would give 2, 3, 4 options to the client. We would talk to them about what their needs are, maybe a variable rate, maybe a fixed rate option. Let's discuss which one best suits your needs. We would discuss some prepayment terms and things like that, their long-term objectives, and figure out a product for them. Today, when we're giving these assessments to clients, we find ourselves at bare minimum giving at least 6 options, sometimes upwards of 10. Because we'll give them, Here's an option that you would look at. If you were to put less than 20% down, we'd be able to get you a better interest rate. However, you would be paying an insurance premium, but because it's amortized over the term, that only changes your mortgage payment by $10, $15, $20. So your payment is actually lower because of the lower interest rate. Here's what it would look like if you put 20 or 25% down at a slightly higher interest rate. Here's what it looks like at an even higher interest rate with a 30-year amortization. And now try doing that for fixed and for variable, various lenders, various products.
But interestingly enough, that actually develops trust with the client.
Absolutely, absolutely.
Right, that you're taking the time to go through this with me,
Yeah.
and you got to go through it quite a few times. Let's
Yeah.
let's go
You know,
through it again.
I think that when you look at obviously having a guest like CLC on here today, we obviously as a company partner with these guys to have in-house brokerages at the majority of our offices, and why we're doing that is because they are knowledgeable and they do know what's going on. I think that this industry is way more confusing. I realize you guys have a handle on it, but it's way more confusing, and I think that agents just don't understand it, and they're trying to convey to people things, and they just don't have a handle on it. So you need to hire the experts in order to get the right information so that you can make an intelligent decision.
Well,
so
I think
one of the
we've done that.
And one of the big parts of that too, Paul, and one of the, as Kendall talked about opportunity, and we talk about opportunity for us as home buying experts, inclusive of the leading edge realtors and the mortgage agents, is now we truly are a valued member of that client's home buying team. We're able to guide them through the process. We're able to provide them expert advice and really ensure that the home buying process, which is something that customers go through, and correct me if I'm wrong, probably once every 4, 5, or 6 years in their lives, are taken through that process very smooth, very efficiently, and by holding their hand throughout it. Essentially,
I think the new business of team and real team, like truly adding value, and not as we say a lot of mortgage agents will, I can get you the best rate. Well, anybody can quote the lowest rate, not understand the policies and guidelines, and then when it comes to the 11th hour, the rate changes. We take seriously servicing your agents, being an extension of the team, and really treating that client as our own, as it's referred over to us. So it's really important, I think, to have, in this climate today, a full servicing station. A real team. A real team.
The rate is never the most important
It's
thing.
not.
Especially you have to ask the right questions. How long do you plan on being in this house? All of a sudden, if you haven't asked the questions and they tell you, oh, I'm only located here for a year or 2 years, then I'm going to sell the house because I'm going back to wherever.
What's the problem?
That is so imperative on what they're going to decide with their mortgage.
What are they going to do?
So you get a cheaper rate, but there's a massive penalty to break it, or whatever.
Or you can't break it.
Or you
Can't
can't
get
break
out.
it at all, right?
Yeah.
And you can't take it to another province.
Well, look, Anthony and I used to sell real estate when the 5-year mortgage rate was 11 3/4.
Yeah.
So when it was that high, you had to go into the Tom Hopkins speech of, oh yeah, it's that high, but it really is only $33 more a month, and you had to break it down to that monthly change to make it affordable. But a question I have for you guys with the mortgage industry is, how has the lenders adjusted? So obviously, when the new rules came in, they also had to have a little bit of a feeling out period to figure out how they deal with things.
Absolutely.
But a lot of times, I find that when lenders have tougher criteria, then they start to look at ways that they can get more business and open things up. So is that happening yet?
100%. So, let's be honest, as we always are. The government kind of sprung us. And when I say us, I'm referring to the industry. Government kind of sprung some of these regulatory changes on the industry without giving lenders, stakeholders, industry participants an opportunity to really assess and determine what the implications and the side effects are going to be, the impacts to the consumers essentially. So when these rule changes were introduced, it gave them a very short window of time to be able to recreate massive amounts of policy to be able to fit within this criteria. And they did that with the best of their abilities, and they made sure that they were compliant and conforming
The timeline,
to what the regulators wanted of them. But just as you mentioned, Paul, along the way, they never lost focus on what was most important to them. Most important to the banks and the lenders is helping Canadians get into homes.
Right.
That's why they're here. We are all partners in this. Just like real estate agents and mortgage agents work together, our lender partners and banks are behind us in ensuring that we have products and services to help Canadians get into homes. So as these rules became tighter and as the guidelines became more rigid, they got to work. And the last, 8, 9, let's call it 10 months, they've been heavily focused on product development. How can we roll out more innovative, more creative products into the market and help Canadians get into homes? And we've seen that happen. They've put a lot of resources, time, and money behind it, and now we're seeing some of these products roll out. Very creative solutions that we didn't have, months ago, right? Whole different landscape, all with that purpose of ensuring that they have a product or a service of value to these Canadians, right?
Wow, very good. Very
Yeah,
good.
that's great. Great info.
It's great, and as I piggybacking on what Paul had mentioned, again, bring it to another level. You train your agents. You bring them
Heavily.
up to speed. Heavily.
Heavily.
And when we have a team that we work together with, like-minded, that's why it is a good fit. And as you know, as a company, we spend an enormous amount of time in encouraging our agents to understand the new laws, to understand how to grow your business. We are in business, and train our agents. So it's nice to see, again, the right fit, the like-minded, and professionalism.
Absolutely.
I
You know what?
think-
We follow your footsteps from that regard, right? You
Yeah.
guys are very heavy on training, on education, on supporting your agents, and it's a testament, obviously, to your brand, which we've noticed and taken note of, and tried to replicate that same credibility, professionalism, and ensuring that if you're holding a Capital Lending Center business card, that you're out there with the most up-to-date information and the best training out there.
A unified thinking of adapt and flourish, right? And this is why I talked to everybody panicked. When everybody was panicking, really you start looking at, okay, well, if people are panicking, there's always opportunity. If people are going bananas, there's always opportunity, and you just have to find what it is. And it comes back to, in our sales industry, holistically, I think that we don't see enough training. We don't see enough guidance. We don't see enough useful tools, right? And this is where I know we all collectively think this way, is just focused on how do we get the right products into our agents' hands. So we're talking about lenders' products, but how do we also get the right products from our companies into our agents' hands? And I think that's where, in this industry, we come out on top.
Right. Fantastic. So I want to give the numbers for the real estate side of things as well, because I'm the numbers guy with
Let's
the official
hear 'em.
stats.
All right.
Yeah, the stats
I
guy.
didn't have access to my papers, but I got it on my phone now. So here are the snapshot for September. And you can go to our Facebook page and get these numbers off of the Facebook page as well. So September 2018, there was 6,455 homes sold, which is up 1.9% from September last year. The average price was up 2.9%. So the average price in the GTA is $796,786. And when we look at breaking that down into the various categories, as we do, we're looking at detached homes. The average price is actually down 0.6%. The semis are up 5.3%. Townhouses are up 4.1%. And condos are up a round number of 10%. So
Affordability.
astronomical.
Affordability.
So we've often talked about the fact that the condo market keeps seeming to close that gap in terms of the value. And any more thoughts on why that is, or when that's going to stop? Maybe get that from your guys' perspective as well.
I actually got a question for you guys from that perspective
Sure.
to
Yeah.
carry on with Tass. So to carry on with what Paul was saying, obviously there's always going to be a need for housing. There's always going to be, immigration. There's always going to be
Just keep
growth.
talking. I'm going to pour another wine,
Absolutely,
which is
please.
part of our program.
Please.
So, but keep talking. Go ahead.
There's always going to be a need for Canadians to have this roof over their head, right? How do you guys see, and I guess in terms of that, all that the purpose of housing and what it's needed for playing out, and especially with condo market, with the towns, you know, kind of that more affordable price range is really what's thriving, it looks like, and driving our market right now, right?
I think that that's what's changing, Shuba. I think the way that people live, their expectations of, you know, whether we call it the Canadian dream, American dream, it was kind of, you know, there was a little line of, you know, you finish school and maybe your first place is, you know, a little condo, and then, you know, you move up to this, and then you move up to a detached house. I think that is really changing. People's expectation of where they're going to live, their wants are changing. So I think that way bigger focus on walkability, and I've mentioned this before. You know, people say, "Oh, it has a walking score of." 5 years ago, if I said to you, "What's the walking score?" you guys say, what the heck are you talking? What's a walking score, right?
Yeah.
But now, that's massive, right? People want to know that, you know, can I walk to the grocery store? Can I walk to public transit? Can I walk to the schools? So, again, big picture, I think people's mentality is changing. They don't want to spend so much time commuting. They don't want to spend so much time in traffic. So the ability to walk to things is huge. And I think the way off is, well, I can live with less space if I can, you know, walk to all of these things, right? So I don't need a massive storage spot in my basement to stockpile, you know, groceries, because the grocery store is 2 seconds away, and I like to buy groceries every day, which again, growing trend, right? People used to buy groceries for the week or for 2 weeks, right?
And
now it's way more common.
In Asia, that's their life, right?
Yeah,
Every
way more
day.
common to shop almost daily, right? For your groceries, right? Even the whole preparation of food, huge upswing in prepared food. Why does every supermarket, if you've looked across the board, they all have prepared food sections?
Right.
Why? Because there's huge demand for that. People, again, they're not cooking at home as much, so therefore they don't need as big of a kitchen. They're picking up prepared food, or they're dining out a lot more. So I think just the way that people are living is really changing, and I think that that's affecting the housing, right? Where the housing is, how big it is. I think that's a big factor. Like the ability to live with less space, right? And it goes all the way down. Furniture, right? It used to be that you couldn't buy like a condo-sized couch, whereas now it's the opposite. Everything's kind of shrunk, right? Because it's there's no precisely, right? So all of that, why is that happening, right? There's a reason, right? There's demand for it. So I think people's mentality is really changing.
So is it a more realistic client? Because I know that we've seen changes in terms of with the market change, that we didn't have the person who had an income of this much that wanted the house of this much, right? We're seeing, and I think you'd agree that I'm actually pricing for what I can afford.
Yeah.
Yeah.
Right. Now, what about mortgaging a condo? Is there any challenges? Is that sort of flowing perfectly? Is there any nuances to mortgaging a condo? Or?
Not really. I mean, from the banks and the lenders' eyes, you know, just like the real estate market and the stats are dictating, it's a very strong growth area. You know, the confidence in the pricing and in the valuations of the condos are there. Really, from a customer's perspective, you know, the one thing to majorly look out for are those maintenance fees, and ensuring that they're including that into their, you know, cost of living, into their lifestyle and affordability, and everything along those lines. But aside from that, you know, most everything else is pretty much the same. Now, you know, size of condos impact a little bit, but that's when we get into the really micro,
So,
300,
the little
350.
400
Yeah.
What's the
square
number
feet?
on that? Is it under 400 square feet or under 350?
Under 400, yeah,
Under
but
400
they're
square
constantly always looking at that and
I
readjusting.
was actually going to say to Shuba's point before, when you said are the lenders adjusting, they are.
Right.
We've seen the number go from, they wouldn't do under 500 before,
Yeah.
and
Yeah.
it's steadily getting smaller because they understand the needs of the market.
And one of the funny things about that, I was at a mortgage conference recently, and one of the topics of discussion actually was condo and that minimum square footage. And one of the things that they were talking about heavily, and to your point, Tass, was they were saying that more and more families are now looking at
Yeah.
condos
Yeah.
and this kind of affordable living, convenience / lifestyle style living where everything is walkable and easy for them. So those micro units that we saw kind of this little bit of a spur of growth in, that area is actually shrinking, where they're now trying to create more kind of 1+ den, 2-bedroom, even 3-bedroom units in some of these condominiums.
Well, what's interesting is that government and building department was insisting with a lot of these developers to build these bigger units years back, and they would go back to them and say, yeah, nobody's buying those, so let us split them up and sell some smaller units, right? Where now they're allotting their bigger units and they're selling.
Yeah.
Right?
Yeah.
So it is certainly a transition.
It's always a cycle, right? And,
Yeah.
and there's usually a cycle for that, and there's a cycle in the mortgage world as well. And just like we're talking about the rule tightenings and the guidelines being a little more restrictive right now, possibly in a few years when we're sitting down on this couch again, or maybe on another couch, we'll be talking about the opposite, how the rules are now loosening, because it's going to go in that circle as well, right? We used to come from 40-year amortization and 0 down payment. Now we're at 25-year amortization with larger down payments and stress
When you
tests and
say that
things.
out loud, it almost sounds like crazy, right? What?
Yeah.
0 down and 40-year amortization,
Absolutely.
right?
It was there. It was
Absolutely.
there.
But
And I mean, it was a
existed.
few short years ago. It wasn't that long
Yeah,
ago,
no, I
right?
know, I know.
Yeah.
Yeah, it's funny.
I don't know the etiquette for the show. Are we supposed to dive right into the wine, or do we wait for a minute to
Oh,
cheers?
yes, Paul
Because I keep looking at the wine
Yeah, me too.
and I'm doing this.
So
Me
there
too,
is no
Kendall.
etiquette.
Do you want my straw?
You just keep drinking.
So tell us
That's
what
all good.
wine
All
number
right.
2
So
is, Paul.
wine number 2 is, and again, the idea is, unlike Tash, you can keep a little bit of wine number 1. And we only have 2 glasses. We only have 2 glasses.
Slow on the pour.
Anthony is a little slow on the pour. We've got more people tonight, but
Yeah.
but the idea is that to taste them, compare them, right? So we've moved from the first wine, which is a 2015 Burgundy, which is Pinot Noir, is the grape from Burgundy, and now we've gone into Rioja. So the first wine, a Pinot Noir, is a red grape where you can serve this with your white wine type of food. So if you're having salmon or fish, this Pinot Noir can go with it. And as you see, it's very light in color and very drinkable with that light type of food. The Rioja is also a fairly light wine. It's a great wine if you're, sipping and drinking. It doesn't have to have some meat with it. As we move into these later wines, you'll find that we really need to have a piece of steak with it. Which
Well, like
you
the
brought.
barbecue.
You brought the steak, right? You
No, I
brought
got
the
the barbecue.
Right. Okay. We'll get some steak going. So this one is a 2010 Rioja, which is a Spanish wine, and it's a Rioja Reserva, and this one's rated 93 out of 100. So let's give that one a try, and then tell me what you think of the difference. And Anthony, if you can do me a favor, take that first bottle and
Yep.
pour yourself a little bit more of the Burgundy there. That's
that's
that
the
bottle
first
right
one?
there. Yeah.
Yeah.
For you and Tass.
No, I don't want any more of that. I'm enjoying
No,
this
no,
one.
but it's
I
the
did
one
compare
back in
that.
the-
You compared them? Okay.
Yeah.
All right. Pour some for you.
And how's the rating system work, Paul? You mentioned it's a 93 score.
Compare.
Higher the
Depends
better.
how
I'm
quickly
assuming.
we drink it.
There is a bunch of different companies that rate wines.
Okay.
Right? So sort of like
first one.
The ratings that we have on Facebook and Google for how the mortgage company is doing, how the
Yeah,
real estate
yeah.
company is
It's kind of like a credit score.
yeah, it's like a credit score. And what these professionals do, the sommeliers, they're tasting these wines and they're giving ratings. But there's probably 10 different companies that rate wines. It's interesting that my rater that I really think agrees with my palate is the Wine Spectator rating. And the wine experience that I'm going down to in New York on Thursday is a Wine Spectator event.
Very
right?
cool.
And what's interesting with that event is all the wine is donated. And when you pay your tuition, all that money goes towards a culinary school, so it's all tax deductible to go down and taste wine. I don't know if I should say that on a film, but it's good. It is donated to the culinary school, and the wines are donated, and they're donated because the winemakers want people to be into wines.
Right.
You know, Shuba, you mentioned that you're not a big wine drinker, and you know we get you to try some of these wines, and all of a sudden you say, hey, you know, this is tasting really nice,
Well,
and we
the
can
third
make
one-
a believer out of you. What is your thoughts on the first two?
The first two are really nice, actually. The first one was, as you mentioned, it was pretty light.
Yeah.
You know, very easy to go down. And I was going to say the funny part about what you said, that you're right. I'm not much of a wine aficionado, as much as you are for sure. But the Chateau Neuf de Pop, we had a bottle of that the night I proposed to my wife. So I remember that bottle very clearly. And I might have drank the whole bottle in order to spur on the courage I
There you
needed
go, there you
to
go.
pop the question.
Oh, that's perfect. And you know that wine does taste based on the company. So you can open a bottle of Chateauneuf and the exact same bottle when you're proposing to your wife, and it's amazing, and everything was great, and the stars were all aligned. And then you try it with your buddies, and you think, hey, it didn't taste so good, right? so it is a company that is certainly a factor with wine.
On wine.
So you can compare, and there is no etiquette on the wine. You can, like Tassus, just gulp yours down, and all good.
So Kendall wants to know if you can mix both together.
So
Make a new wine.
What we
This is the Kendall.
what we do not allow is we do not allow the mixtures.
Okay.
Although from our last podcast, I had gone down to California for a week of wine tasting in Napa Valley, and we went to what was the name of that winery that we went to? But it is I can't think of it, but they do a blend. And what they did is they had all of the components for the blend, and we went to a tasting, and we were given all of the different wines that they use in the blend, and we were all given some measuring devices, and then we came up with our own blend. So we got to blend the wine and see if we could come up
that's
with something
interesting.
better. And then at the end of that, then we got to try what the winemaker had produced as their blend, which
Yeah.
is their premium brand for that wine, and the winemakers do know what they were doing because they were the best.
Yeah.
It was absolutely great. But it was amazing to take, and you actually take a little bit of a straw and you suck out a little thing and you measure it as so many milliliters. You write down your formula, and then we all started to taste each other's and see who did the best job.
Wow.
So a lot of fun.
Wow.
A lot of
Look at
fun.
that.
So I want to.
I heard podcasts in California. I'm like, why weren't we invited to that?
Yeah. So I invited these guys, but they didn't show up. So I'm on the wine buying and have to go to all the tastings and choose the wine. But
All in the name of the podcast,
all
guys.
in the name of the
All in the
podcast.
name of
Yes,
the
yes.
podcast.
It's all the podcast budget. So I just want to read out the first thing I did was compare September 2017 to September 2018, and now I'm just going to do the month over month basis. So we had August 2018. There was 6839 homes sold, so that was up 1.75% from the month before, and it was 6959 homes sold, and the average price went up from 765 to 796, so that was a 4.12% increase from the
1
month
month.
before. So very, very good numbers there. And then when we look at the activity in the market, we had in September, we had 15,920 new listings, which is up 30% from the month before. And last year in September, we had 20,000 new listings. So number of listings is down a little bit. And then when we look at the average price on the month over month basis, the condos, which was up the most, was up 5.7% from August 2018. Townhouses was up 1.58%, and semis were up 6.8%. So that's interesting that the semis on that month over month basis was up a little bit higher, and then the detached home was up 2.37%. So although down slightly year over year, on a month to month basis, was up a little bit.
Crept up, yes.
Yeah, so really interesting to look at those numbers, and I think that, looking at the stats is good, but what is our feeling? What are the agents saying out there? Are they, starting to look at things getting,
I think the agents are seeing it as the market's getting better, Paul.
Right.
I think there's more activity. I think we mentioned this before. In part, maybe it's just the agents actually getting back to work,
Right.
and that's a part of it, right? You had, July and August traditionally. There's people that are away a lot, including realtors, because a lot of them are cottaging or out vacationing. And I think September in general is a time where people are all saying, "Hey, okay, it's September, back to the grind. Let's do
Get
what we got to do."
serious,
So
yeah.
realtors start working, and I think just the public is more in line with, okay, our vacation time is over,
You gotta do
and
it.
now we got to do what we
find
got
the
to do. We
house.
need to move, or we,
Yeah.
whatever, put our house for sale.
Yeah.
So I think if you were to poll the agents, the general consensus would be that the market is getting better. They've adjusted, and the public has adjusted somewhat to the rules changes in the financing, and they're understanding it.
Right.
So I think it is smoothening out, right?
Right.
And getting better for the
Right.
agents.
Another question I had for you guys
Yep.
is, obviously you guys do refinance or people's renewals, and how have we really had an impact or seen the impact of the changes with that? So have we got a list of
Absolutely. Oh,
people that need to sell because they can't get a mortgage now, or they can't
Absolutely.
renew?
No.
Or is there any type of grandfathering for people that have mortgages on renewal, or what happens with renewals?
Do you want my honest opinion on this
I
one?
always we always go with the
I-
honest.
I might- I might ru-
tape.
I might ruffle a couple feathers with my honest opinion
Yeah.
of this
That's
one.
okay. We love
but
we
I'll,
love
but I'll
to
give you
ruffle
what it
feathers.
is.
Street.
So, we talked about how cyclical the economic cycle is in the financial world.
Right.
The mortgage industry as a whole is very reflective of election cycles.
Right.
Right.
Okay, so if you watch election cycles, you'll often know what's going to happen in the mortgage world. Even the U.S. election cycle, you'll see that the Canadian mortgage market will go fairly stagnant during that period of time. Interest rates won't fluctuate a lot because everybody's kind of sitting along with investors to wait and see what's
Waiting.
going to happen in the U.S. political landscape as that
Right.
impacts global bond markets and rates and things like that, right?
Right.
Now, where I was really leaning with this, with your question, was the impacts of the government rule changes were not felt immediately. Hence, it went through very smoothly, because if constituents aren't complaining and nobody's feeling the impacts of it, then there's no reason to worry about what's happening.
Right, we've had this discussion
We've
before,
had this
right?
discussion,
Yeah,
right?
Yeah.
So now what's beginning to happen, and you're absolutely right, Paul, is that a lot of people aren't able to move their mortgages
They're
as
handcuffed.
flexibly as they were before.
handcuffed.
They're now handcuffed. So you're with a specific lender, instead of having the option to freely move in the free market that we are to, lender B or lender C or lender D, you have to stay with lender A.
Is that
And you
because
have-
it's not a variable? It's a fixed term?
It's-
or
It's
ju-
it's because upon renewal you're not requalifying.
oh, okay.
So when and
Yeah.
Shu will get into with the rule changes, what you could have qualified for 8 months ago,
That's
Yeah.
the point.
you cannot qualify
That's
for
it.
today.
So you've been in this mortgage for 10 years, you've owned this property for 10 years, maybe 6, maybe 5.
You may not qualify.
Now your mortgage is up for renewal. Let's say you bought the house 5 years ago. You were fine to buy it 5 years ago. You've paid your mortgage down. You've never missed a
And they
payment.
may not qualify?
You may not qualify to move your mortgage, right?
So they'll renew it.
They'll
They have
renew
a
it.
grandfathering that they will renew it. They don't make
Yep.
you requalify,
Yep.
right? But they can't shop it around.
And
So
interestingly enough,
it handcuffs.
I see.
You're
You may
getting
not be able to
renewed
get
at the
more
new suggested
money.
rate.
Maybe
They don't negotiate rate with you, right?
Oh, I see. Yeah.
they're not
Okay.
negotiating
a little bit. The
rate.
banks
So
are
we're not
like,
talking about
okay.
a
little bit of a clinks.
So your point is
Renew
not
it, no
renew.
questions
we're
asked,
not
but
talking
this
about
is the rate.
Okay, so renewing is not the
General,
issue.
right?
Renewing's not the issue. It's having that free market option is, right? So I don't want to be with this lender because I heard,
Yeah.
my neighbor got this rate from that bank.
Right.
But you don't have the option to move to that bank. Or I had to pay for my kid's university this past year, and I'd like to consolidate. My plan was to consolidate that into mortgage when it came up for renewal at a very low rate. Now you don't have that option anymore, right? So now you're sitting with that $30,000-$40,000 maybe sitting on your line of credit or some other form of unsecured debt.
Right.
So essentially what's happening and starting to happen already is now the constituents, now the consumer are starting to say, well, we don't like these rule changes too much, right? Because it impacted buyers up until this point. But
Right.
now we're gone through a cycle, so now it's impacting people that have come up for renewal. And the interesting statistic, Anthony, is that 47% of Canadian mortgages were up for renewal this year.
What percentage?
47%.
Almost half of them.
I was actually about to jump in and say, I
Yeah.
don't want to sound like that conspiracy nut, but
Yeah,
50% of mortgages
yeah.
come due.
So
Now-
the
now
Massive
is-
number, is it not?
massive, massive. The largest
And
one-time single
think about-
percentage
think about
of
the-
mortgages coming
Why
up.
is that?
Timing.
know? It
Timing.
just-
timing.
It was just people were getting into homes so heavily over the course of the last few months. Their mortgages all lined up that ended up that they were maturing at this point in time, right?
Very smart people with mathematics. figure
Now,
these things
is there steps that people can take to put themselves in a better position to be able to renew, or is it something that is possible, or not really?
You know, one of the main suggestions and the biggest ones that we make is get ahead of it. So
Right.
definitely start where you would have started possibly 4 months out, typically 120 days out. We'd like to get started about 6 months out. So having some conversations with that client about, are there any options to reposition yourselves? Maybe some of that debt, is it possible that we pay it down ahead of time? Is there something that we can do to kind of better the situation for yourself to make sure that the options are available, right? But really getting ahead of it's the best.
And in fairness to the 48% that kind of fell, I'll use the word victim loosely to this. It's a very harsh thing to say, but were handcuffed in. We worked on deals where we saw it keep changing so quickly. So from November to December, you were okay. Oh, we're cutting it close. No, you're still okay. Still okay. December to February, you're done, right? So the changes were so fast and furious that at that point it was very difficult and we really didn't know how aggressive it was going to be. And really, we've had this debate with a few smart people, and one thing we recognize in the past 10 years, all these financial wizards, nobody actually got it right. Everybody talked about the bubble bursting. Everybody talked about what was the direction it was going to move in. In 10 years, nobody actually got it right. And then we had these very rapid changes. And Shuba's right. Now you can do what you can to adjust. But we're hoping for, what are you talking, the looser days?
It's coming. It's coming.
It's talking about that cycle.
Well,
let's get into that
election
cycle.
cycle. Well, the election cycle starts next year, right? So the political
40-year money
parties.
down?
I don't know when that's coming. Hopefully soon. But
Yeah.
one of the major impacts, Paul, of your question has really been, and it's definitely impacted, a lot of the agents at Leading Edge, is that consumers were able to refinance their properties from the massive appreciation and equity that's grown in their properties, be able to extract that potentially for a move up or potentially for the purchase of an investment property and all of these things. Now those options have become very limited because
Right.
refinances are very difficult now in today's market, right?
Right.
Yeah, so that's definitely a major impact.
Wow.
Yeah, so I guess for a realtor, you're seeing a great scenario. You're taking money out to buy another property. We're not seeing as much of that as we used to before.
Right, and I think the other side of that is a lot of parents helping kids are not able to extract that money to help kids, and I guess that's where secondary financing and take out a second mortgage and that type of, is that picked up considerably because of that? Or?
It has. I mean, statistically, it definitely has. The alternative side and the private space especially has increased their market share. There's some estimates saying that prior to January 1st, the private market had about 5% market share overall. Right now, there's some estimates, and nothing's very clear because it's an unregulated market space, but there's
Right.
estimates saying that, we're upwards of 15% right now
Wow.
into the private
So
space,
triple the
right?
amount, yeah.
Yeah, and it's concerning, right? It's concerning from the standpoint of you want to have regulators and people with eyes on it to be able to make sure that they know what's happening. Not to say that these aren't solutions or products that are beneficial, but you want to have somebody at least to be able to see what's happening. And even like I mentioned, some experts are saying that it's upwards of 15%. Nobody knows because
Right.
there's not a clear line, right? So being
Right.
able to know those would be good.
Right, but when you have that kind of change in market stats, then you would think the A lenders are going to have to make some changes
Some
and,
adjustments.
and,
You
and
would
to,
think
to
so.
pressure the government to be able to
And they
loosen
are.
things up, right?
And they
Because
are.
they don't want to lose that market share.
Absolutely. One of the
Right.
Alternative lending space is getting very aggressive in that.
alternative lending is getting very aggressive, but one of the biggest factors, from my eyes anyways, that happened from this B20 stress test was huge. Obviously, the way that the banks raised capital was huge via insurable and uninsurable. But one of the smaller but pretty large impactful rule changes was the removal of what we call NIQ mortgages. They're called non-income qualifying mortgages.
Yeah.
Right.
So there was a segment of the market that was, equity-based, net worth-based. We were lending to them based on resources that they had, regardless of their income, right? So elderly, for one, people that had established high net worths, whether through investments, through savings, or in the real estate market. Candidates that had high net worths. So a lot of people, business owners that maybe liquidated or sold their business or their assets and are now sitting on a lot of money, are now unable to take advantage of a leverage to get into the real estate market, because all lenders are required to have some sort of servicing element or some sort of income qualifying element involved in all of their mortgages.
Wow.
And that's actually, we wouldn't have thought that it would have had as big an impact as it did, but Kendall and I have seen it dramatically in our brokerage, where agents are no longer able to service a segment, now not a very large segment, but a decent segment nonetheless, of their customers that fit this criteria. Right now, there are some innovative products again that have been coming out slowly but surely. Reverse mortgages are definitely taking on more and more market share as days go by. But those net worth programs and equity programs really serve the needs of a lot of Canadians, and it's unfortunate that they're no longer in existence.
It's a move back to the private space. Shiva talks about this all the time. We've had to restructure business as well, because you've always said this. It's intended to be a short-term solution,
Right.
and private lending is now turning into long-term solutions.
Right.
Whereas a lot of the investors in this space will start to get a lot more nervous that they can't pull these funds back out.
But I also thought that in general, private lending was considerably higher rates, and I've heard that those rates are more competitive with the regular lenders now. Is that true? Or am I-
Absolutely.
Yeah.
Absolutely. So one of the funny, and that's just really a victim of circumstance.
Yeah.
But in the private lending space, typically investors were looking to earn about 500 basis points or 5% above the bond yields, above
Right.
what markets could return them. What's happened now through competition and a lot of people trying to get involved into that space, take advantage of these higher interest rates on secured investments, it's flooded the market and actually decreased the interest rate. So where the rates are rising because of bond yields from the lender's standpoint, banks, trust companies, credit unions, they're all increasing their rates. Private lenders, unfortunately, for grandma and mom and dad, who are some of the lenders in these circumstances, are lowering their rates, right? So where they should all be consecutively going up or climbing that ladder together, that's where you're getting that.
That sectors become more
more competitive. Yeah.
But they're probably getting better quality of deals, right? That they can finance now.
Much
right?
better quality of deal, but to Kendall's
you
point,
have the other
Taz,
problem.
is that it was always designed as a short-term solution. People
Yeah.
can pay 7-8% right now,
Short-term.
short-term, but
Yeah.
now there's no options to exit them. So
The
now,
strategy
was
when
always
a
that,
refi.
1 year becomes a 2 year, and that
Right.
2 year becomes
but
a 3
now they
year,
can get those a little bit lower, and then they're in long term.
they're in long-term,
Yeah.
right? But not long-term affordable to the person who's taking that money.
Right.
You
So-
know what? A perfect example: people that are going to go out to buy a property to renovate it and resell it. Right?
Yeah.
Short term.
That
Short
a
term.
lot of time is their business, right?
100%.
That's how they make a living. So they do that and resell and do it again and again and again. But they're not likely showing that as an income,
Yeah.
or that's not an income that's acceptable to a traditional bank to get a regular mortgage.
Yeah.
So now they have to go private.
They go private. I mean,
Yeah.
for those kind of
term.
clients and those kind of borrowers, it's always been a great option. You
Yeah.
just put it into your cost of doing business.
Yeah.
If it makes
Yeah.
sense to pay a higher rate and a higher fee,
Yeah,
you know, when
that
you
makes
kind of
sense.
calculate what you're going to
For a
make,
year,
then
6 months.
sometimes it's the path of least resistance,
Yeah.
however, to get it done.
Yeah.
Right?
We also talk a lot about values and the market in the GTA continuing to be strong because of the undersupply. So we've got an election happening, and I was at an event last week where we were listening to Tory, and who's the young lady running against Tory? She was the planner for the city of Toronto. Can you guys, Vendetta, look that up for me.
We really should know
We're
that.
not-
Google.
we're not-
Google. Is she the one that wears
Toronto
that "Make America Great"?
No.
There's that one candidate. Remember, they wouldn't pay her ads.
Keysmat?
Jennifer Keysman?
Jennifer Keysmat, that's the one. So I listened to Jennifer Keysmat and Tory speak at the TREB assembly that was for broker breakfast, and interesting to look at both of their plans. I think that Keysmat had a way more aggressive plan. She was the planner for the city of Toronto, and she's looking at, I think, producing 10,000 lower priced properties over the next 10 years, and Tory was 4,000, right? So when you look at these numbers, they're just not enough to do it. But she had made a little bit of an error on understanding rent controls on condos, so she seemed to take a lot of heat over that. It looked like mostly negative press. I really like her views. I don't live in Toronto, so I don't get to vote. Do you guys live in Toronto?
Markham.
Markham. Okay, so yeah, we're none of us are living in Toronto, but I think that she has a better plan, in my view. Also, looking at infrastructure. Tory wants to rebuild the Gardner Expressway and that elevated highway. What's her name again? Keysmat?
Keysmat.
Keysmat. Jennifer? Yeah, Jennifer. She said, no, that's old school. There's nobody building elevated roads anymore. We can clear that out, put in a different solution, have hundreds of acres of buildable residential property on the lakefront, and this is a better scenario. So I'm endorsing Jennifer, even though I can't remember her
vote
name,
for
and I don't get to vote. But
You know
I
what's
think
interesting
that's a
to me
better
about
way
what
to
you
go.
just said, Paul, and maybe our Vendetta friends want to correct me on my stat that I'm about to give, but I believe the last I heard from CMHC when they gave their market update earlier this year was they said it's expected that each year for the next 5 years that Toronto and the GTA and surrounding areas are expecting about 300,000 people each year in immigration growth.
Yeah.
Right, and you know, we're talking about 4,000 houses from John Tory, 10,000 houses from Jennifer Keysmat, and 300,000 people in growth
Yeah.
each year.
Yeah,
for
yeah.
the year.
Yeah.
The math doesn't make
No,
sense.
and
right?
this is a segment. So this is just the
affordable
the
housing.
affordable
Affordable
housing,
housing,
right?
okay.
And
Got it.
obviously there is still the rest of it going on.
Yeah.
But we challenge both of these politicians on, hey, why are prices so high? It's because the costs for building. We had development fees.
Yeah,
A
levies,
friend of mine
taxes.
is building up in Aurora, and they're building 22 residential units, and then some commercial space, and it's $1 million in
Yeah.
development fees.
Wow.
This is crazy.
Wow.
So that's like $50,000 a door is development fees. So you got to pass. Now he's going to rent them, but you got to pass that cost
much.
on. So we really need to. My view on government is they need to learn to spend less money and
course.
to do things within a budget. They just keep looking at ways to take more, right?
Yeah.
They're keep reaching in our pockets, and they need to stop reaching in our pockets and run things more efficiently, right? That's what needs to happen.
And is either candidate talking, or is that out of their realm of government about discussing the development fees, or?
No, I think that it is something that they both can get involved with, but not even just development fees, but let's look at the double land transfer tax in the city of Toronto and the effect of that. So you need to have a down payment. The land transfer tax
It's almost the
is
same price.
like a astronomical amount when you add the double taxation on that. It makes it extremely difficult. Now it's helped the 905 and the 705 and the outlying areas,
Still
but
doesn't make it right, does it?
no, it doesn't make it right. And when they bring these things in, it's a temporary measure, and then once they've got them, it's going to last forever.
Yeah.
I guess income tax was a temporary measure, right, for the war. And how's that working out for us, right? So we need to really look at trying to find somebody that is thinking that way. But also they talked a lot about transportation and the gridlock in the city. And you look at trying to get down to an event or go anywhere, and it's just crazy to get anywhere in the city. So that's a big factor. And I think that Keesmaat also had some better ideas for transit. Really aggressive. She's really more younger, aggressive type of approach, and I think that's the right approach to take.
It's funny, I was just telling someone this morning, and Kendall and I come from the same area. Kendall's probably a little bit smarter than me because he decides to avoid the traffic in the morning. So he'll work from home early during that rush hour, and then he'll get here really quickly once that rush hour ends. I decide to tackle the rush hour.
handle it.
I try to get
It's
here for 8
frustrating.
in the morning.
Yeah.
But one of the things that happens for me is when I'm coming from Markham, so from the same time it takes me to get from Markham to Leslie and 401 is the same time that it takes me to get from Leslie and 401 to here, which is, for our viewers, about 2 blocks from there.
Right.
Because it takes me about 20 to 25 minutes to get off of the off-ramp at Leslie, and then anywhere between another 15 to 25 minutes
Now, have you
from
tried
there to
Waze?
here. I have.
You have, okay.
And that's the best I'm getting, Paul.
No ways. That's no ways for Shuba. No ways.
It
That's what it
tells
actually
me when
says.
there's some cops hiding around.
Right,
but
there
It
you
actually
go.
just says no ways.
No way.
No ways.
You're out of luck.
No ways,
Just
Shuba.
turn back around and work from home.
There you go. There you go. So you guys, maybe we actually asked our viewers to send in some questions. So why don't we give us a question, Steve, from our viewers? And I'm going to pour a wine while Steve's reading this question out.
All right, I'll lean into the microphone so everyone can hear me. So this goes out to everybody, I suppose. With legalization of marijuana, how will that impact disclosure slash stigmatization of properties as a result of grow ops, etc.?
Well, Paul's trying to get me drunk.
All he heard was wine in my belly. Sorry, Paul.
That's a good question.
That was also a big pour I just gave to Shuba. Did you see that? I forgot about the little pour. So there we go. I just filled them up.
Repeat
Kendall,
the
you want me
question.
to
Would
top
you-
Repeat the
you up?
question. We're
What's that?
we're
You want me
losing
to
our
top you
focus.
up?
Oh, jeez, guys.
Sorry,
I'm gonna
sorry.
repeat the question, okay?
It's getting exciting.
All
It's
right.
a serious room here, guys. Come on.
All right.
All right, so with legalization of marijuana, how will that impact disclosure slash stigmatization of properties as the result of grow ops, etc.? So I think basically what the question's
Great
asking
question.
is now that people can legally grow marijuana in their home, how will that impact having to disclose that as well as stigmatization of the property?
Great
and lowering,
question.
Property values.
Yeah.
So I'll jump in from the finance perspective, and then I'm sure these guys have a lot more insight for us. Ours is actually fairly quick and easy.
Not really.
No, ours is really quick and easy. So when the announcement was made that marijuana was going to be legalized and people were going to have the ability to grow it in their houses, we did make the call to quite a few of the executives at a lot of the large lenders and banks and asked them, how is this going to impact your policy? And just like every answer we get, well, that's going to have to be something that we look at, and it's not a change that's been made. So as of today, mortgage lending has not yet adopted to the fact that marijuana is legalized. So regardless of whether you're growing a few plants for recreational use legalized, or you got a basement full of plants for commercial or for selling, it's still looked at as being
A grow up.
a grow up. It's still looked at as a grow up, and
And there is rules prior to, because this we're filming this before the 17th of October.
Yeah.
It'll come out after the 17th of
This will
October.
come out after the
So we won't
17th.
be smoking marijuana on our podcast
the
until
next
next episode. Right.
There'll be a big plant in the middle.
That might be a good way to kick it off. Now, I do know that Elon Musk did that, and his stock plummeted. So maybe it's not a good idea.
Not a good idea.
CEO of Tesla anymore.
No, I know he
Yeah.
got punted from CEO of Tesla.
Not worth having
But
the joint.
What I wanted to ask is that there is a stigma prior to the 17th
Yeah.
that if it was used as a grow op
Can't get
remediation,
financing, yeah.
you basically can't get financing.
Yeah, remediation aside, you can pass your ESA for the
get
electrical,
a
you can pass mold and air quality test and get certification and clearance from that standpoint, you still can't get financing.
Right. So I don't think even if it's legal, if
It
that
doesn't matter.
affects the home,
Yeah.
that I think that we're going to still have those challenges, and it'll become more rampant because more people will be using homes for growing marijuana.
And how are you
Yeah.
going to know now? So before it
Yeah.
was
Yeah, I
an
was about to
illegal
say.
grow op. So that whole part kind of grew, and then there was a registry, and you could go online and check
with the police.
check with the police, right?
Right.
So you knew that a property was a grow op because it was busted by the police.
Yeah.
Whereas now
Yeah.
it's legal, so the guy could have been growing,
Yeah.
plants. And
It's
you
gonna
don't
be
even know,
it's gonna
right?
be interesting how it plays out.
Well-
sorry to jump in, but one of the things that I foresee happening, it's similar to the knob and tube days, how I see it, or Kitech plumbing even, right? So how do we know that there's Kitech plumbing in the property? Home inspector tells us, appraiser tells us, there's a lot of different factors, right? So is that going to be the new way of disclosure, that the home inspector and appraiser are going to have an area in there to mark down that this was a grow op or the
And was it an
potential
issue?
hazard?
Because like you said, Shiba, was it one plant?
That's right.
So
Yeah.
I think with the banks, their position, I think what well, you guys obviously realize this, is they're not obligated to lend anybody money. So if I'm the bank and there's a question mark, meaning is this house safe because it was a grow op, right? I don't have to investigate. I don't care about what
Easier to say no.
certificates you're going to bring me. It's my money that I'm lending you based on this as the asset. So if I have any concern whatsoever about the asset, it's simple for me to have a policy. I'm not going to lend on
You
those
hit it on the head.
products.
You will actually,
You hit it
what
on
you
the
just
head.
said is
Right?
because it's awesome and beyond the marijuana question. We actually teach this to our agents. What you just said is that the lenders are not obligated to give you any
Yes,
money.
precisely.
Part of our training is, I say this all the
Pink
time.
hat.
I talk about part
pink
of our
hat.
training session is the pink hat. And when we always
What's the
challenge.
pink, what's the pink hat?
We're gonna get right to this. So the pink hat is.
Okay, sorry,
Ken
sorry.
has
I
the
just got
pink hat.
I got
down
the pink
to
hat.
that. You're in
that
the
he's
pink
gonna
hat.
put
What's
on.
that?
And I say,
that?
the question is the lender. I don't understand why the lender's asking for this, or I understand why the lender wants this, or I understand why the lender's doing that. And my response is simply because we try and explain it, and nobody got it. So I just went on to say, if the lender tells you when you sign the commitment you need to wear a pink hat, that's all it is.
Yeah.
That's the pink hat. If you don't wear the pink hat,
Yeah.
you don't get the mortgage.
Yeah.
And I think that there's a confusion, and this is to that question, is that they don't have to do.
That's right.
They're not obligated to lend.
They're private. It's a private company lending out money.
Yes.
So they're not. I think a lot of the public has this opinion that they have to give you a money. No, they don't.
They don't.
Right?
But
It's their money.
But right now, it's a very good question, but it's a little preliminary, and because we'll see what happens
Yes.
Absolutely.
after the 17th
Yes.
and after next winter and next year. And all I could say is I've read a few articles on it, and it was along the lines of, if you look at a full-fledged, what we're accustomed to, grow op, I would tell the agents, you can't get a mortgage. I mean, in the worst case scenarios, they stole the power, the houses were full of mold,
Yeah.
and it was just like astronomical. Oh, but it's absolutely perfect. We've got the test results. Look how beautiful it is. Can't get a mortgage,
Yeah.
right? Basically, unless you wanted a crazy high rate at 10%, 15%.
Even then, it was
12%.
difficult.
And even it was
Find an
difficult.
investor
then
who
it was
wants
difficult.
to do
I
it.
think the point is, what I've been reading is that if it's proven that it's just a plant or two. They're going to actually have rules, and what I read is
Yeah.
on the amount. I don't know if it's 3 plants. I think it was 4 plants is what I read. So if you want your 4 little pretty plants or 3 plants, and it's sort of discovered that you did that, and it should not eventually, I hope, affect financing, because that might be the norm for to have a couple plants or a few plants, or to have one growing in the backyard. So I think it may evolve into that, because they even got into that with condos in this article, that people in condominiums, I mean, that's their residence, they may have 1 or 2 plants, in their.
But I also think when
why
you
can't you get a mortgage
when you
if
look
you're growing a
when
few
you look
plants?
at that, Anthony,
not a
there's
co-op.
nobody that's going to get a police report about a grow op when somebody has 3 or 4 plants.
Right.
Right. So, nobody's going to know.
So then
Right.
here's the question.
This is what I
That was
think
actually
it's
where I was
moving
trying to-
into?
I was
Yeah.
gonna-
I
that's what I was
think-
going to ask, is how do you prove it?
Right.
But here's the question for you guys.
How do you know there was only 4 plants?
Yeah.
So
How do you
here's
know there wasn't 10 plants for 10 years?
Right. But
Was
if
it
they
4 plants for
but-
a week?
But if they didn't
Yeah,
get
right.
if they didn't get busted by the police, then there's no police record. I would think that a police record would be the way
You have to disclose.
that you
though.
would know that.
The point is we as agents, the question might have been, and we might get away from the question. Like, do we have?
Do we need to read the
disclose?
question again? Are we okay? Or we're
No, but
That
I
was
think
a loaded question, Vendetta.
It is a loaded question. Do we have to disclose? And if the law says you're allowed to have 3 plants or 4 plants, I think the answer is you don't have to disclose.
So here's the question for you then, Anthony. And my question is this then. So let's forget for a minute the, local person that wants to grow for their own personal use with 3 plants, let's call it.
Yeah.
Now let's look at the hundreds of people who are licensed to commercially grow for sale. And whether they're buying a commercial property, an industrial property, or doing it in a residentially zoned property, how do these people get financing, and how is that property impacted moving forward? If you're buying $1 million commercial
right.
unit,
But if you're buying a greenhouse or operation to grow
Commercial
plants,
business.
how is that any different than growing
Can't do it in a
marijuana?
house.
I mean, well, the difference today, and I'm
Yeah.
not saying it's going to be the difference tomorrow, but the
Right.
difference today is that if you're growing tomato plants in a greenhouse, there's no stigma or anything that dictates you can't get financing in the future.
Right.
However, if you're growing 1,000 marijuana plants, there is, because it's deemed as a grow op, and now that property moving forward can't get financing. So what happens to the potential investment value of that, or the future value of that property, right? And not to say, I hope that there's a solution, but these are the conversations I think that the lenders should really be having now,
But
as
it
we
should be in
loom
a
on that
house.
day.
It should not be in a house.
No,
if you're licensed,
there's no way if you're
Yeah.
licensed that it should
You're
be
gonna
in
do
a
Yeah,
house,
in a
right?
house,
It's
in a
gotta be
house.
commercial.
No, I
Yeah.
have a lot of knowledge of the grow ops. I had one.
Yeah.
It wasn't actually mine, but I had a tenant. Seriously, I had a tenant.
You poor guy.
Oh, you had me
that-
nervous.
Geez, you've had everything.
I like how he shifted. It was a tenant.
No, it was a
You
tenant.
had a
So
grow.
I had a tenant that
Who was working
had
there.
a grow op, and this tenant had a bunch of medicinal marijuana licenses to grow, except unfortunately he grew 30 times more plants than
License
what the
allowed.
licenses allowed. And he got busted, and it was a nightmare to remediate this property.
Yeah.
And
Wow.
they actually, and you look at it, and this is obviously old school, but you look at it from the standpoint of the landlord. They seized my property.
Yeah.
This was my tenant. They seized my property. I had to go to them to get permission to sell it. The only way I could get it sold is to remediate it. And if anybody needs a negative air machine, I have one, right? Because I bought one because constantly
Wow.
trying to get air samples to
Yeah, I don't even know what that is.
to come in under the threshold was difficult. Because sometimes you're taking the air samples outside, it's higher, but the numbers that you had to get down to, it was a challenge. It cost hundreds of thousands of dollars to remediate the property in order to get it to the point that I could sell it and get rid of the property.
Wow.
So big challenge, and there certainly has to be some new legislation, new rules surrounding how these operations are done, the venting, the watering, and I really don't think they can be done. This was an industrial property, right?
Yeah.
So it fits along what you're saying is not a home,
Yeah.
but you can't do that, and because of mold, because of air quality, and all those type of things. So I think that this question, great question from our guys there, but a question that we'll have to build on next month.
Absolutely.
After things are legalized, and then keep reporting on an ongoing basis. I know there's a lot of programs that are being offered on this through the board. I guess it's an interesting topic. Do we have another question, Vendetta? What else we
Absolutely.
got?
I'll put my best question voice on.
Okay. Woo.
So I'm a new agent. What should I be looking for in a brokerage when I'm getting started?
Century
leading
21
edge.
leading edge.
That one's easy.
21
That one's
leading
easy.
edge.
That's the easiest question ever.
They need financing.
Look no further.
Wine on a table.
we start with an easy one, and now we start with
So
the
that
hard
makes
one,
it
now we go
simple.
into the-
So you guys think of the answer to that
We
in
just
your
did.
elevator speech, and I'm just going to introduce the next wine. So the next wine that we have, guys,
I saved
is
some this time.
yes, you saved them. Good call. So this next wine is a 2004 Brunello di Montalcino.
Sounds
And,
Italian.
Yeah, it sounds Italian, just so that you guys can see the wine that it is. And this one has probably been in my wine cellar for about 10 years.
Oh, wow.
And a lot of the wines in my cellar are sitting there and waiting to be ready to drink. Obviously, an Italian wine. You can see the legs on that glass. See, Shuba, this is referred to as the legs.
Yep.
Can you see the, right?
Yeah.
So when we talk about legs, we're not talking about the ladies. We're talking about the wine. And,
So only Italian wine has that?
no.
Oh, okay.
Okay, sorry.
Italian
Sorry,
legs.
sorry.
Italian legs.
That was a little bit of confusion, right?
Yes.
This is what you were talking about when you talked about the conversation
it's
got
nice.
a little different
Yeah,
as you
yeah.
moved into
Maybe
the
a-
third wine.
I might be biased, but I like this one.
35
you like
minute
this one.
mark here?
So the legs has nothing to do with the fact that it's an Italian wine.
Okay.
All wine has legs. Just some of it doesn't have as nice a legs as others.
Got it. Got it.
Okay.
We're talking about the wine still.
And we're talking about wine, and it's got
You don't
nothing to
like
do
my
with
legs?
it's got
love
nothing to
your
do with Italian, Spanish, French, right? They can all have legs. All right. So
Notice the legs.
Some legs are better than others, though.
some legs are
The
better than
legs.
others, and when we look at it, it's really the viscosity of the wine, and when you see a lot of legs and them rolling down the side, you've got a lot of sort of that complexity in your mouth, right? I know that you're having I gave you quite a big
That
pour
one.
on this one, so it'll give you a chance to swishel that around and feel the legs in your mouth, right? And get that viscosity of the wine. So this is a Brunello di Montalcino. It's the Sangiovese grape. This is the Italian wine.
You have to
It's
say it like this.
grape.
All of a
Sangiovese.
sudden he talks and he goes like this.
Yeah, that's the San-
Well, can we go like this?
Now,
Can we go cheers?
cheers, yes, cheers with the
Passes.
Italian Sangiovese.
Cheers, guys.
Cheers, gentlemen.
Cheers, guys. You guys ready for our next pour?
I think we're good to go.
Okay, perfect. So, a great wine. This wine, Italian wine, is going to go more with the Italian dishes, the pasta, that type of food. Really not like the first two. The first two were very much a wine that you can sit and sip. This really needs to have food with it. Unfortunately, we don't want to eat during our podcast, so we're tasting it for its potential with that pasta. So just think of a little bolognese sauce.
I can picture
your
it already.
rigatoni.
And you know the viscosity of that bolognese sauce with the legs on the Brunello. It's a thing of beauty.
I can picture it in my mind right now.
That's good.
Okay, the next real estate question. What was the real estate question?
Hold on
Steve,
one
give that
second.
to us again, please.
That was kind of a tease on that wine, by the
There
way.
you
Use your good voice.
There we go.
So I'm a new agent. What should I be looking for in a brokerage when getting started? I'm not sure if there would be a difference in the answer to somebody who's already been in the industry for 10 years, or if there's a contrast to that answer. But that's the specific one. What should I be looking for in a brokerage when getting started in real estate?
Sure. So, I'll tackle that first. And I think that, obviously it'd be easy to say, look for us. But I think that the answer is to go, and they suggest that you interview a number of brokerages. I think that you want to look at the environment, look at whether they're asking questions, listening to what you're saying. How does that interview go? Are you going in and then telling you things, or are they offering things to you? I think that's a big factor. I think that brokerages need to listen to what it is that you're trying to accomplish, and then see if they have the solutions for that. I think the obvious answers are training, support,
Yeah.
Orientation.
Also looking at the the winning attitude. Like what should a new mortgage agent look for when they're looking for a new brokerage?
You know what?
It's the same thing.
It's very similar.
Similar.
It's
Yeah.
the exact same thing. Support, training, and one of the things that we talk about more often than anything is what can your brokerage do for you?
Right.
Right? The question sometimes in our industry is what can you do for us, right? How much business are you bringing us? How much volume? How many deals? But from a brokerage perspective, and Kendall and I believe this, and I know you guys do as well, is what can we do for our agents?
And to add to that, I just didn't say more importantly, but to add to that, because we actually, when we do interviews, we actually train the people interviewing us how to interview somebody else. And one of the important things that we give them before they leave is get them to explain to you how they do it. So
Yes.
everybody can tell you exactly what we said, but we can break it down. We can show you exactly how we're going to do it. We can show you what your training schedule is going to look like. We can show you how our tools are going to breed success for you. And we're talking about tools, training, software systems, but I think one of the most important things that we all hold dear is a genuine care for our agents.
Yep.
And I think that comes through in the interview process.
Yeah.
A lot of times, interestingly enough, I think all of us can gain trust very quickly in that interview because they sense you actually do care about my individual success, even though you guys are a very large network and you care about your agent's individual success. So, a little bit of kudos to C21.
I think on that note, Kendall, your comment of show me, right, is fantastic because what I find is a lot of people sell all kinds of sizzle, but there's nothing there, right? And I've had people say, "Oh, this brokerage has that," and I'm scratching my head thinking, I've got pretty good knowledge of what other brokerages have, and they don't have that. What you think that you're getting there does not exist. So, but they've been sold this bill of goods. So I like to be interactive during an interview and say, look, well, here it is. Let's jump online and let's look at this.
Yes.
Now, you run the risk of sometimes technology doesn't work or something isn't, but you got to believe in your product. So believing in your product, you should be able to display it right in front of them, right?
Absolutely.
Stuff like training. You say, that guy told me he's going to train me himself is my favorite line. That does not fly. I'm going to train you myself, right? So I go on and I say, here's our schedule, and look, all of the training that I just discussed with you, here it is on the schedule.
Yes.
Every second Tuesday is Rob Vivian. Every
With
Monday is this,
trainers.
right? Yeah. So when they see it that it's actually online on a schedule, Shuba, that's my point. Right?
Absolutely.
Show them.
It's real.
It's not someone just saying, "Oh yeah, I'm going to train you." Come on, with what, right? Like show me that you really have the goods.
Absolutely.
And so that I think that's an important factor for people to actually investigate. Does the person actually have what they say they're going to provide me?
And when we've had them come back to us, they say the same thing. They started stumbling when we said, okay, so how do you do that? What? Well, how do you do this? How do you do that? And they start stumbling because it's easy, and we're in the sales business. Shuba says it all the time. The easiest person to sell is a salesperson, right? So, and we know this. A lot of people get a lot of success in sales with a lot of just sizzle.
Yeah.
but they're not even close to as successful as they could be if there was some of the stake there with it,
Yeah.
right?
Yep.
So
Yep.
I think it's really the how. How do you do the things that you're saying that you're going to do, and are you investing dollars back into my career?
Right.
We
Yep.
have we
Yep.
have a saying that good salespeople sell the what, great salespeople show you the how. That's
Yeah.
it.
That's a good one. Very good. You know, it's also interesting when you look at, I'm listening to these answers and I'm starting to think that CLC is the best place to go for mortgages. Leading Edge is the best place to go for real estate.
Absolutely.
What a good fit.
Listening to the answers here. But the other thing that I think is interesting is we have a manager that we have out in our Durham office that came from a REMAX office. I won't say the particular REMAX office, but said that in 18 years working at that brokerage, he doesn't remember anybody that left that organization and came back. And he's been with us only, I think, 3 years now, and he says there's like 25 to 30 people a year that come back.
Yeah.
And we just had another, double Centurion producer that left a year ago, and again she was sold. And this is not to the question that they asked. This was an experienced agent, making between $400,000 and $500,000 a year, but was sold all kinds of sizzle
Yep.
from another REMAX office.
Yep.
And they went there because we try to talk them out of it and try to say, hey, this is sizzle, this is not steak. But we also say, hey, if you want to give it a go, you got to give it a go.
Absolutely.
And that particular person has come back. We do the rehire interview to say, hey, what was good there? What were you missing here? What can we do different? Trying to always improve.
Yep.
So great to have that agent back, and she explained it that she feels like she's home now, as opposed to a number at the office that she
That's
was.
awesome.
she
And
was
you know
at.
what? I think the last point that I think again for both offices is very important. We talked about support, we talked about training, but something that's often left off the table, which is very near and dear to our hearts, and I know it is for you guys as well, is the culture, the environment
Yes.
of having people there that you can lean on, go to. How you just referred to, Paul, at this agent saying they feel at home now.
Mm-hmm.
That's something that you can't make it. It's either there or it's not, right?
Yeah.
And that culture and that feel and that environment is very important for success and for mental well-being and happiness and growth, right?
It's true.
There's
Yeah.
no looking over your shoulder. I know there isn't
Exactly.
at my office, and
Not at
that's
all.
fantastic
Share.
because I've worked in offices. I worked at, it was, not surprisingly, it was a REMAX office where in my 8 years there, I saw 2 physical fights. I mean
Wow.
physical
Really?
fights between agents
Wow.
Wow.
in 8 years. Like that,
Wow.
that should not happen,
Not at all.
right? So, and no, we have not had any fist fights at 801 York Mills, for the record. I don't even think we've had any arguments.
To your office?
No, well, I can only comment on what happens at my office. right?
You should come over to Main Street. Look at all
It happens all the time there. No.
Every Thursday.
I only comment on what I've seen, right? So I can comment to what I've seen there, right? So,
No, you're absolutely correct.
Yeah.
The camaraderie.
yeah, no,
comfort,
it's a big
they,
deal.
They share. It's just
They
overwhelming.
help, they support.
Oh, there's no doubt about it.
Yeah.
Culture is king. We say too.
Yep.
When you talk about the person, they're going to train me myself.
Yeah.
Everybody here is approachable, accessible, but we have the proper people in place to do what they need to do for the agents.
Yeah.
Absolutely. Yep.
A really exciting new program that we're actually just starting with Century 21 Leading Edge and really Century 21 in general as a brand is we have a new marketing fund, and this marketing fund is an increase in our fee structure. A lot of Century 21 offices pass that on to their agents. We didn't. But we still signed up to it and provide that to them. And there is a lot of amazing new features and new advertising mediums that are coming out. We've got Back At You Media. We've got Real Satisfied for customer ratings and things like that.
and a lot of amazing products that are being offered. And we've actually got that now into what they call the Century 21 Concierge Program. And we had a manager meeting earlier on today and just talking about rolling that out and how that's going to be. And it's basically very involved. It's 10 to 12 classes of 45 minutes to communicate and explain to the agents all the amazing stuff that we have. And that's what's also interesting in this real estate industry and the mortgage industry is you can have agents that are with you and don't know what it is that you've got.
That's right.
Absolutely.
And we, a lot of times as brokerages, we give up and we say, oh, it's hopeless. We can't, convey that. But we take the attitude, and I know you guys do as well,
Consistency.
that we've got to consistently promote that. We've got to look at different ways to engage the agents. We don't just recruit agents, but we also look at retention and
Absolutely.
touching base with our existing agents and making sure that they're aware of programs that we offer. So
It's our responsibility to make
Yep.
sure that they have the tools, the services, and the systems they need to succeed, right?
yeah,
Yep.
absolutely,
Yeah.
absolutely.
I actually love your re-entry interview. It's awesome.
Yeah, it's a lot of fun, and I find that when I do those interviews and go through that process, I get jazzed. I think, hey, wow, this is a good place to work. I convince myself.
I'm in. Where do I
I'm
sign
in.
up?
Yeah,
If it
yeah.
feels right,
You want to be
it
at
is
York
right.
Mills where
Yeah.
there's no fist fight.
Yeah, oh yeah, no, fist the
Not a
cuffs.
single one.
I can actually report that Leading Edge has. We actually are coming up in April 2019 is our 25th anniversary.
Wow.
So
Congratulations.
we should probably
That's
have some type of an anniversary party,
That's
I agree.
amazing.
right?
Yeah.
We should
And
celebrate.
I can say that in 25 years, I'm not actually familiar with any fights
No?
that have ever.
Oh.
I can think of a couple of raised voices a couple of times, but I don't recall any fights in any of our offices. So I think that we have a clean slate.
What
on
an
that.
accomplishment. Not
What
the,
an
not the no
accomplishment.
No
fights.
fisticuffs. No
The
fisticuffs.
25
But the
years,
quarter of a
but I mean,
century.
no fights is also,
That's right.
you know,
Yeah.
nothing
That's
to
also
shake
good.
a stick
I know. I
at.
just want an opportunity to say fisticuffs. I just love it.
Fisticuffs?
Fistic- no
There you go.
fisticuffs.
There was.
There you go. Now, Anthony Shuba, we need to get that left glass emptied.
This one, or
Because
because this was the latest. That
yeah, the
seems
latest
out.
is the right. So the left glass needs to be empty, and we're going to move to our fourth wine. And the fourth wine, for you guys, so that you know, is a.
She was like, "What did I say?" I'm thinking, what's
Are we
happening?
on the
What's
field?
happening?
This one is Don Malpoir. It is a 2011 Cabernet Sauvignon. So this is a Chilean wine. Yeah, product of Chile, Chilean wine, and this is a Cabernet. So this is getting into a heavier, really complex wine that is going to go great with a steak. You can see just the darkness of that wine, and that grape is a Cabernet Sauvignon, and that's the main grape that's in that wine. So we'll
just
give
wanna
that
make the
give that a pour. Are you guys out there ready for another pour? You want to go right to the right side of the pour table here? Oh, look at Anthony finish that one off pretty good.
Me too.
Look at these guys, like cups out.
Oh yeah.
Fisticuffs.
Please, sir.
Fisticuffs. Fisticuffs. There we go.
There you go. Cheers, boys.
Just
We'll
a little
give,
one for me, Paul.
We'll give a little one to the teetotaler here.
Thank you.
There we go.
There you go. There you go.
We got training in the early morning tomorrow.
Oh
Yeah,
boy.
there you go. So talking about early morning tomorrow. So which wine did I pour there? This left side, right? Let me just try that
Is
one.
this the
just to
cab
see.
that we're drinking now?
Yeah, this is the cab. Yeah, yeah.
Tass is thinking it doesn't matter. They're all good.
Just actually start with just the nose on that wine and see the extreme difference on the
Yeah.
Yeah.
on the nose.
Let's check out the legs on
The
this
aroma.
one.
Check out the legs on that one. See if the Chileans have good legs
some
too.
legs, got some
Oh,
legs.
very nice legs on the
Yes.
Chilean as well.
Not like the Italian legs.
The Italian legs were good, Anthony.
That's definitely my favorite so far.
Yeah.
a
Now,
heavier-
yeah, it's a heavier wine, and when you're trying this wine, you really have to picture it with that marbled steak, you know, with that meat, and then you can picture it
Right.
just molding in very, very nicely. So what I was talking about tomorrow, talking about your training.
Yeah.
So tomorrow I'm going to a full day Zillow training event. So as you guys know, Century 21 Canada signed up as the first real estate company to provide listings to Zillow.
Yep.
We've actually had a couple of other companies follow suit.
Yep.
Of course, they weren't first, but they're second and third. It's also interesting that I have seen some other competitor brands that are talking to me like Century 21 has done a deal with the devil, and that Zillow is the devil, and we should not have done this. And what's interesting is that we employ through T3 and the Century 21 technology company that actually represents Century 21. They understand what's happening in the U.S. They know that Zillow is an advertising giant, right? So I know you guys know the numbers, but I'll ask you guys: are you familiar with Zillow?
Familiar, yeah,
Yeah. Okay.
absolutely.
So, what kind of numbers of monthly visitors do you think Zillow gets?
I'll throw out 500,000 users,
Okay.
or visitors.
What do you think, Kendall?
7 million.
7 million. Okay. So, Zillow, which is a company that's been around for 10 years, has a $9.2 billion cap as valuation. They generated $1 billion in revenue in 10 years, still has not made a profit, but they generate 180 million visitors a month
Wow.
on Zillow. It is a massive, mammoth advertising giant. They have about 700,000 requests for Canadian data a month,
Wow.
and they have none. So that's why they've come into the Canadian market, and they now will have Century 21 Leading Edge and a few other companies that came on board providing that data to them. So it is a huge advantage for our sellers, for our agents, to be able to market themselves. And it is just like can you just imagine that number? Like I had to
Yeah.
double
Crazy.
check the math,
Yeah.
right? And,
Yeah.
and vet it and look, right?
When you're
that's
going like
not-
this, I was going to say
Yeah.
100 million, but I was going to say that's going to sound
Yeah,
ridiculous.
that's crazy. But 180 million a month,
That's crazy.
That's
right?
right.
It is just astronomical.
We don't get the size of it, and I think we don't get how involved, like for instance in the States, Zillow it, right? It's become the common thing that if what's that property? I don't know. Check Zillow.
Yeah.
Zillow it, right?
Yeah.
So
It's a verb now.
yeah, it's a verb.
Yeah.
Yeah,
It's pop
so,
culture. It's culture.
It's culture, exactly. It is the go-to place in the States. Sorry, the first go-to place. So
Right.
Yeah.
Wow.
Yeah.
Wow.
So tomorrow I'm going to a full day event. This is not a Century 21 event. This is Zillow coming to Canada and hosting an event in Toronto. So I'm going to certainly find more information about it. It's actually interesting that I'm talking to somebody this morning and they were saying, oh yeah, I see the listings on Zillow. So the Canadian listings are not on Zillow yet. It has not been launched yet. So they think they're seeing the listings, but they're not actually there yet. But it is an amazing advertising giant, and we will have that opportunity
to be able to be the first to advertise there and to have a bunch of preferential treatment by being first.
That's awesome.
And it's also interesting when you look at when other companies are so against it and so concerned about it, that I think that therein lies the story, right?
Right.
Why are they so concerned,
Yeah.
right? And it's also, another point that I want to make on this is that a lot of times we look at things as anecdotal. So this particular person, and I was chatting with somebody from Royal LePage, right? And they were saying that, well, no, I know this person that said that what Zillow does is they send that out to the listing agent and they send the same leads out to a bunch of different agents, right? And this is a particular person saying something. So this is not a double-blind study to see what actually happens, right? What my interpretation of this is that the consumer probably went online and saw 4 people available to get information on that property and emailed all of them
Yeah.
and said, hey, I want information, and then everybody's saying, well, they get it from everywhere. It's not the case. It doesn't make sense. And their revenue of $1 billion last year was raised from selling advertising to realtors. That's what they do. They're an advertising vehicle. So they're not competing with us to sell real estate, but they are doing a better job of presenting the data to the consumer in order to get that advertising dollar.
And Paul, are you most excited about the exposure that Century 21 is going to get from being a part of this advertising machine, or are you more excited? One of the things that I heard from it that I would be excited about is the fact that you guys are leading the way in this innovation and in this kind of future way of thinking in Canada.
Yeah, I think that it is from the innovation and being on the leading edge of the curve and what's coming.
No pun intended.
Yeah, no pun intended. But the reality is that they will be here, whether we're first or somebody else is first, or whether they take 3 years to get somebody to sign on. They have 700,000 visitors a month. They need to satisfy that need. It makes sense to satisfy that need, and that's more than the Canadian number is more than the number you thought for all of Zillow in the U.S.
No, absolutely.
Just so you know, you said 500,000.
I was thinking Canada, Paul.
Well, you were thinking Canada, okay. Yeah. And
No, I'm just trying to defend my answer.
They don't have any data, and they've got 700,000 requests. What happens when they have data?
Yeah.
And what does this mean for the consumers that list with Century 21? I shouldn't say it like that, but that's the truth,
Yeah.
right? It is the truth. Is that nobody should list with anybody else now?
Yeah, no, it's very true.
Right?
Your question, Shuba, right? What does it mean?
Yeah.
It means that our clients' listings will be exposed to those 700,000
Yeah.
buyers, and Canada, Toronto especially, is a place that people internationally are looking to move to. So if Zillow's already an avenue that they go to, right? And they're punching in Canada, and our listings are the only ones that are listed on there. Like, that's a huge advantage for our listings, right? So that's fantastic.
Yeah. And the truth is that they do always show the listing agent at
First,
no
yeah.
charge
Yeah.
first, and that's where we're going to show up. And then eventually, and it's going to take 6 to 12 months before they start selling advertising in Canada, and then you're going to see your premier agents on the same listings, but below the listing agent as another option. Now, what's interesting with this is that when we talk about our Real Satisfied and agent ratings, and I don't know if you guys do a lot of stuff with website in terms of ratings, but ratings is so important with Zillow, and unfortunately our Real Satisfied ratings are not transferable to Zillow, but you can go in there and ask your clients to rate you on the Zillow site.
Oh, that's good.
And what happens is when you look at a listing in the US, you'll see the listing agent that's not involved with Zillow, and they'll have no ratings.
Yeah.
And then you'll have
3 premier agents advertised, and they each have a 4.7 out of 5 rating.
Yeah.
And who is the consumer going to call?
Absolutely.
So my view is that we're first, so we need to look at getting our ratings up.
Building that
And
foundation.
if you look at it, you say, okay, the listing agent has a rating of 5.2 out of 5. Okay, that's not possible. I was exaggerating. Okay,
8 out of 5. 5 out of 5.
5 out of 5, 4 point something out of 5.
Yeah.
And then you have premier agents that also have similar ratings. They're probably going to click on the listing agent. So we need to jump on this, get our ratings up, get involved with it, and huge value from it.
I think it's exciting that you guys are leading the charge on it. I think that anytime you're innovating and anytime you're creating change, it's positive. And you mentioned some of your competitors or some of your peers in the industry are saying, why are you doing it? Or they're kind of fearful of it. In my experience, and it's not that much, but when people are scared of something, it's usually because they don't understand it,
Yep.
they don't know it, and the first to the table is going to be the one that's going to be able to take the most advantage
I
of
think
it.
we've been, and this answers the question before, how do you choose a brokerage? I think this is part of the answer.
You're back. You're back.
I'm back to that.
I like the way
He's
you
slow. He's a little bit slow, Kendall.
I like the
I'm
way
back.
you think. Don't you like the way he
I
thinks?
love the way you think.
You know?
Right? Like this is why you choose the brokerage you do. I think, and we talk about this, and we said, what will your brokerage do for you? It is our responsibilities as responsibilities as broker owners to take these risks, go after these, see what works, invest in it. Does this work? Does this not work? What is breeding success for our agents? And I think you talk about it naturally, we talk about it naturally, which means it's genuine. This is actually truly happening. So I'm going back to the question from before because it applies back to it. There's a little bit of wine involved.
There is a little bit, but that's
A little
good.
bit.
Just a little
That's why,
bit.
the head is good and so's the legs. Yeah. I like the way you think, right? And the way the legs are.
The
right,
way the
Paul?
legs
There you go.
legs are moving.
There you go. What other questions do we have for our mortgage guys here tonight?
What does every agent always ask? How's the interest rates? What's the trend?
Oh, okay.
Is
yeah.
that a good
You guys
thing?
have a crystal ball, right?
Oh, absolutely,
Is that okay?
absolutely. Let me
Isn't
bust
that
it
always
out.
the typical
Let me
question?
rub this glass of wine and see how
And the reason I said that, I was being a bit silly, but isn't that what you're usually asked, or am I wrong?
Absolutely.
And interestingly enough, like again, we love that question because we move from that question very quickly. And again, it comes back to the how. It comes back to being a servicing agent. We instruct our mortgage agents to talk to how are you going to service your realtor.
Right.
Right.
But Kendall, just so you know where his question is coming from, he's talking about Bank of Canada and where are the rates going. I think that's
Thank you.
that's
Oh,
what he
okay, all right,
Sorry,
all right.
but
Thank
you
you.
were misinterpreting that.
I was misinterpreting.
Yeah,
it.
so-
Paul,
you're supposed
Paul
to ask that
understands
question
my.
Yeah, I understand Anthony. So
He
yeah.
understands me.
That
But-
question was supposed to come after bottled
Poor
wine.
you. Well, thank you for understanding.
They still kind of tie back together because we made the joke about the crystal ball, and it's really kind of, I know it seems like I'm redirecting, but that's actually what we do. It is really being prepared for all the changes that are coming. Do we know what's going to happen? Shuba, you like to answer this more than I don't like to answer this question at all. I really don't. I'm not comfortable answering this question.
Shuba knows.
So I'll give you the.
See,
This is what I do.
Snap answered, right?
Yes.
Next.
I don't like to touch this at
That's
all.
why we're best buddies.
Yes.
So to answer your question, Anthony, was that so again, dependent on when this episode airs, but one of the biggest factors that's recently impacted mortgage rates was
2 or
the
4 plants.
3.
3. We're okay if it's 3.
the USMCA, formerly known as NAFTA.
Yeah.
Okay, so the United States Mexico Canada Agreement, as it's now known. We were sitting on the fence for quite some time waiting to see what was going to happen with that. Was Canada going to be involved in a deal? How was that going to impact our economy and all of these kind of things? Now that we've apparently reached said deal, it's driven our interest rates up. So one of the, and this is actually a question I'd love to have with a lot of your agents actually, because the media, when they discuss interest rates, they discuss Bank of Canada. They discuss the prime rate. They discuss, when Bank of Canada makes their interest rate announcement, if interest rates go up, that means our interest rates go up. Well, statistically, 20% of Canadians are in a variable rate mortgage or a mortgage that's impacted by the prime rate.
Yeah.
Majority of Canadians are on the conservative side. We take fixed rate mortgages for the most part. So by the time, you know, the media is talking about, well, Bank of Canada is possibly going to increase at the next announcement, fixed rate mortgages have already gone up over the last couple of weeks because of the USMCA announcement. So what we've seen over the last couple of weeks, fixed rates gone up quite a bit, quite substantially, almost half a point. You know, and that's been due to the pressure on the bond yields. So the difference is, one of the important things for I think your agents and viewers to understand, variable rate mortgages, Bank of Canada prime rate runs on a different plane than fixed rate mortgages. Fixed rate mortgages are reflective directly of the bond market. That's how the banks raise the capital for these type of mortgages, whereas the variable rate mortgages and the prime lending rate is more impacted on, you know, the national economy, right? So media often talks about interest rate hikes and Bank of Canada announcements. Those are reflective only of a small segment. Prime rate, fixed rates have already increased as so, and it is anticipated that, you know, to answer the second part of that question, that the prime rate is going to increase in the foreseeable near future. You know, we are trying to, and the Government of Canada, the Finance Minister, they've all announced it time and time again that they are trying to increase interest rates during a long period of stagnation. Interest rates have been suppressed and low for many, many years now. They're trying to get that up. So, you know, your buyers, your consumers, your homeowners, and your realtors should expect that we are in what's called a rising rate environment right now. Not a bad thing from my perspective. You know, Kendall was steering the conversation in one direction, and we could definitely talk about that, and there's great merit to what he was talking about. The other aspect to it from a financial perspective is when you see increasing interest rates, you know what we see? Stronger economy.
Yeah.
Right? You see a stronger, more balanced economy. People are earning more money on their investments. People have more opportunity to make money and to profit, and it's just better for us overall. So, you know, the fear and the stigma often associated with higher interest rates or rising interest rates, I mean, hey, if you're paying more in interest, guess what? That means you're making more in interest, right? So that offsets the two. So sometimes it's not a bad thing. It's really just, again, understanding what it is, understanding what's happening, and how it specifically impacts you, because everybody's going to be different.
So Shuba's answer is brilliant, and it's a great answer. It's an awesome answer. The reason why I was answering the way that I was answering is most people don't want to hear Shuba's answer. Right? Really, when we're getting asked this question.
Yeah, thanks a lot. Thank you.
Right.
Thank you.
I stepped away for a few minutes and I came back and he was still going. I don't know what the heck. It was like, you know, why?
So
It made a lot of sense.
It is brilliant.
Did it make sense?
It did.
All I have to do is sit there and be quiet, and I look brilliant sitting beside him.
Yes.
But my answer is a little bit different.
And I
simply
sit
because
beside you and I look good. See? See how that
I
works?
told you it's the head.
It's the head. But simply the reason I answer the way I do is because the question is not being asked for that reason.
Yeah.
It's being asked for, from a purchasing standpoint, are the rates going to go up? Well, my question back to a realtor is when houses went from $500,000 to $1 million, what did you do? Our interest rate was nothing compared to the increase in prices, right? So, you know, our answer, and this is, I was alluding to this earlier, is that when you ask, do clients ask about interest rate, for us and for our people, we're only on, we love the question, but we're literally only on that question for about 2 minutes.
Yeah.
We move away from it very fast. The answer to your question is everybody at CLC going to try and get every C21 leading edge realtor the best rate possible? Absolutely. But more importantly, we have to put your clients in the best products.
The right
and even
package.
more importantly, we have to make your clients feel as if they get the absolute best service from us.
You know,
Right.
you know what the question should be,
Both good
Anthony,
answers. Yeah.
Tass and Paul.
Mine is
and-
really short.
And this could be
But I liked it too.
Thank you.
this could be something that you take back to the agents, to the office, and something that I'd be happy to share. The question should shift.
We're doing a podcast, so you're actually sharing.
We're
it.
talking. We're sharing. I thought we were drinking, but we're sharing. That's what the big pour does to me. That's what the big pour
We're
does.
gonna take that back to them. They're listening.
We're gonna
They're
give it to them
listening.
right now.
Tell them what you want to tell them.
The question
mind.
And we're
should
sharing.
be- we're sharing. The question should be not what the best interest rate is. What is my lowest overall cost of borrowing? how can I get into the lowest interest rate, which is an entry cost, the lowest administration and management fees throughout the term, and the lowest exit cost on penalty and discharge. And all three combined equals your overall cost of borrowing, and that's what everybody should be after.
And an agent who is speaking to your realtor's clients like that, a mortgage agent, is going to grab their attention.
Yes.
The person who is promising,
Wait,
I'll get you the best rate. I got it, done. What do you want? 2.79? Done. We see the same story. We get a lot of business this way, is that I had this clown of an agent before, mortgage agent, to be specific, that promised me all this stuff, and then when we came down to it, it turned into a nightmare, right? And really, it's looking for somebody who's going to make the realtor look good. This is a part of my team. This is my financial professional who is going to educate my client, right? So yes, the given is, do we always go after the best rate? Absolutely we do, but the cost of borrowing.
But everybody's not cookie cutters. Everyone has different scenarios.
Today it's
Everybody has different jobs, different professions, from self-employed to assets to debts. So there's no such thing as that's the rate.
Different needs,
Yes.
different objectives, different goals, right? I'll share a quick story with you guys. A client that we recently worked on, they were qualified for a lower rate at a 25-year amortization. They chose a higher rate at a 30-year amortization because of the lifestyle circumstances that they were in.
Yeah.
They were just about to get into a home for the first time by themselves. And the important thing for them was having a lower monthly overhead cost so that they can get acclimated to home ownership, so they can get comfortable in that. The interest rate to them wasn't as important as the monthly payment was to them,
makes sense.
right? So circumstances, lifestyle, objectives, goals, all very important things to consider.
And I think a lot of, it sounds, it's weird, but a lot of people don't really understand what the difference in basis points actually is. Interesting story, girlfriend of mine doing her mortgage. Back in the days of 2.79.
Not your girlfriend.
No,
A girl.
friend that's a
Are
girl.
you not married?
Yes, a friend that's a
You're
girl.
married,
Yes.
right?
Are you married?
Your wife's watching this podcast, right?
So you're married.
Hold on a
girlfriend
second.
of
Hold on.
yours.
Let me just
girlfriend
like,
client.
Unbelievable.
I said this wrong earlier.
Do you need a napkin?
Yeah, I gotta wipe it down.
Well, no, it's the temperature.
It is.
I don't know why it's
27
25
degrees.
So
degrees,
guys, that
20
wasn't bad because earlier he said to me, I went to my girlfriend's wedding, and I just scratched my head, and this was today, right?
Yeah,
when he said I just
it
got back from vacation, I was like,
What?
what?
You went to your
What?
girlfriend's
You went to
wedding?
your girlfriend's wedding? Hold on a second. How does that make
A
sense?
friend of mine that is a girl.
A friend of his, it's a girl. There you go.
2.79. She really wanted the 2.69. I was convincing her on the product.
6'9" is that? You're joking.
I was convincing her on the
What
product.
kind of girlfriends do you
And I'm
have?
going to continue. I keep going, convince her on the product, and it was.
So she's getting a mortgage?
She's getting a mortgage.
She's getting a mortgage.
She's getting a
Okay,
mortgage.
gotcha. Gotcha.
Oh my God. So she's getting a mortgage. 35 minutes in.
Vendetta,
Oh,
where
we're
is he?
an hour and 35
Yeah,
minutes
we're
in. Vendetta.
Yeah, but she said, I asked her, I said, what do you think your savings is going to be on this mortgage?
Yeah.
She said $300. I said, try $8.
Wow.
And I've actually done this.
$8.
$8.
Yeah.
And I've actually done this exercise more and more. It was in the beginning of my career, and I actually learned a lot from that conversation. So we don't necessarily talk in rate anymore. We talk about the payment,
Yes.
right?
And definitely not with our girlfriends.
Yes. I think I can have some wine.
Yes.
Yeah,
let's
I need to get
Yeah. Quickly.
Why don't we take another question, guys?
So there was one that actually related kind of to the topic you guys got onto when the new agent was asking what factors they should look for in a brokerage. One existing agent of Century 21 Leading Edge talks about Rob Vivian training, absolutely love it. Rob recommends focusing on 3 pillars of your business. What would your 3 pillars be and why?
Oh, wow. Interesting question. Anthony, take that one.
What would my 3 pillars be and why?
Exactly right.
In terms of running the business?
This is 3 pillars for prospecting. So as an example, database management, door knocking.
Well, from a manager broker standpoint, there's a lot of similarities. So in other words, I've been in sales a long time, and when you're in sales, you're looking at prospecting, having different sources of business, as you mentioned, whether it was farming, using the telephone, whatever your pillars were. I know today Rob suggests 3 pillars to concentrate
Come on, Anthony. I like when you go back to what your
good
dad told you.
Yeah.
Come on. What did my dad tell me? Come on.
Oh.
Let's go back to that.
I do. I have to tell you, that's a very good point. I remember I had a hat trick one weekend.
Right.
I sold 3 homes. I came into the office Monday morning. He was sitting doing the daily listings. For those that may not know that, the listings came on little newsprints, and you had to file them in the books. So I says, Dad, I got 3 deals on the weekend. I got the hat trick. That's done. That's yesterday's business. What are you doing this week? Oh my God! You know, I went on a listing appointment. Came to the office. Did they sign the listing? Well, no, they like me. Did they sign the listing? Dad, they're going to give it to me. Yes, they are. You didn't get it signed. Forget it. So, anyways, you made me sidetrack a bit there. But there's the accountability,
Right.
having someone in there. I think from a broker management standpoint, we also, as successful salespeople, have to have things that we work on. So we work on our database, which is other agents, our existing agents, our clients, our existing agents are our clients, and other agents from other companies. So that's kind of our database, because we like to grow our company and get the right people to join Leading Edge. And then there's other sources of business. It's not just the database. What else you do in terms of growing the business, in terms of recruiting. So from my standpoint, that's from the manager's standpoint, is the calls, the database. Gosh, there's so many things that
Breaking
that
up
you do.
fights?
Breaking up fights, no.
Your
But
dad
I think
telling
from
you
a
to get to
business
work.
standpoint, you went and asked me, Paul. I think really and truly, I think of it from a brokerage standpoint. We have a lot of systems in place. We spend a lot of time. Paul takes the time to actually go to training sessions. So that's one thing that I say we, but you take the credit. Go and analyze and
I
go.
take
and
the credit?
You should take the credit, because you'll take the course, go to the U.S.
Didn't it sound like
and
you
then
were saying
bring
I'd
it,
taken it
Now
away?
and
you
then
get-
bring
now
it
you
to
get
the,
it.
to the
You
agents.
just
Isn't that
take it.
correct? So in terms of the brokerage, and am I answering the question?
I think that you're rambling on now.
I'm rambling.
You know what, Anthony? I think that.
I was on 2 points. I had 2 out of 3.
So I'm gonna do Paul a solid here, because when you asked about the interest rates,
Yeah.
Paul seems to think that I gave a long drawn out
Yeah, that's
answer.
right.
So I'm gonna give you guys a nice short answer on that.
On our
question.
behalf?
All right.
This is
On our behalf.
how, why. Okay, go
The
ahead.
short
You
answer
wouldn't make me
is
drink
one thing:
Yeah.
activity. Activity translates to results. Done.
Thank you very
Okay.
much.
Yeah, go ahead. Go ahead.
Honesty with yourself and accountability.
Perfect.
Yeah.
So I will expand on that a little bit, because the question was, what 3 pillars, right?
Well,
Yeah, I was
What'd
trying to
you
keep
do?
it short.
So you're keeping it short.
Two.
So
Oh, you gave me the other two? All right.
I think that when you look at that, the first pillar, and really when and I'm going to give the long answer. Sorry. Shuba.
No, go
Are we
ahead.
calling that the Shuba now?
Yeah, this is the Shuba. We're going to have the Shuba. I'm going to Shuba.
Shuba
Yeah.
Anthony and Isaac.
So what happens is that when agents look at getting business, everybody always wants the shiny thing. They always want to look at what is new, exciting, online,
answer.
magic, fast buck, this type of thing. And the reality is that the absolute 100% best way to get business is to go to your database, your center of influence, your past clients, and let them know that you rely on their business and you would like them to send you business. And if you knew anybody that wanted to buy and sell real estate, would you be comfortable sending them to me? Fantastic. Do you know anybody now? Anybody from work? Right? So this is interesting, because I actually went down, as we talked about a few podcasts ago, to Alabama to interview and work with an agent there that has a team that does 750 transactions a year. And we were analyzing his numbers and looking at what he was doing, and one number that stood out to me was he had an extremely low number on his past clients and center of influence. And part of the reason why he had a low number is he was doing a bunch of things. He was sending them for ice cream on their birthdays and doing all this lovey-dovey stuff, but he never said, my business relies on you sending me referrals. I need your business. A lot of times they think we don't need it.
Yeah.
And we need to make it clear that we want them to send us business. And this is the absolute, bar none, best source of business. And if we look at the sales trainer, who's the sales trainer that does just database?
Brian Buffini.
Brian Buffini, good work. I couldn't think of his name, but Brian Buffini is all about that, and really that's great.
Building it.
If that's the one pillar,
Yeah.
and the other two pillars should be anything that you want, and that's what's interesting is that, and the answer, to the question is anything you want. There is sales trainers like Mike Ferry that says the only way to do it is my way, right? And I don't support and get a lot involved with what Mike Ferry is doing, because I know from being in the business there are thousands of ways for that additional two pillars, and any one that you want to choose is good.
Yep.
And some are long term, some are short term, but choose two
Systems.
and then take Shuba's advice. Shuba, your advice again was?
Activity.
Activity.
Just do it.
Activity,
Yeah,
right?
activity.
And this is great advice that Shuba gave, because if you go to training and learn what it is that you're supposed to do,
don't do it.
and you don't have the Shuba, you don't have the activity,
Exactly.
it doesn't amount to a whole hill of beans.
That's right.
So you gotta have that activity.
It's funny you say that, and I'm not making this up. I got a call today from a realtor who did exactly that.
Yeah.
Said we haven't spoken in 2-3 years, and he said, not sure if you know what I'm doing now. This is what I'm doing, and I really know. Can I count on you to send business my way? We sit down and talk, because I have a lot to offer. Any referrals you may have for me. It was very odd that you just brought that up, because I got that call today.
Wow, very good.
Well,
Kudos
Did
to
you
that.
tell him I'm sorry, but you're not with Leading Edge, therefore that's what it is. We like to be
Yes.
true. We like to be
We'd
real
like-
here.
We'd like to have his
Yeah,
name.
Yes,
Because
we
that's
will.
the type of agent that we would like to have on
Yeah,
board
Because that's a
Absolutely.
good
with,
point.
with Leading Edge.
So that's
Absolutely.
actually part of the plan.
Yeah,
Let's
okay.
sit down and have some.
There you
so,
go.
That's great.
Yeah.
All right,
So,
so
the
we've
last
been
wine.
the last wine. Oh, okay.
Yeah, the last one.
This is
I
the
already tried it.
Chateauneuf,
This
so don't worry,
is-
Kendall. I won't propose to you.
Yeah, so he might be feeling a little bit amorous now, so I just be careful, right? So the last wine is the Chateauneuf de Pape. As you guys know, that is my favorite region. And let me just look at what we have brought here. So we have
Very
Good wine.
flavorful, isn't it?
So
yeah,
good.
So we
So good.
have a 2006 Bauche Renard Chateauneuf de Pape. So again, my favorite region. Same grape as they use in a lot of the Australian wines, the Syrah or Shiraz, and it's the same grape, and just my favorite wine.
And do you
Nice.
very
Okay.
often find a favorite year as well, or no? It doesn't really matter.
Yeah, so you're the new guy to the podcast asking these questions, but just to give you the
$10
answer,
wine guy asking
give,
these
you-
questions.
give you the answer on the year. So wine is really all about the grape. It's all about the harvest. It's all about what was that harvest like? What was the weather like? And really, when you look at choosing wine, what you should use is not a Chateauneuf or this particular brand of wine. It is looking at a vintage chart to see what was the overall rating of the vintage.
Yeah.
So in Chateauneuf, for example, 1998, an amazing year. When you look at Bordeaux, I can name that 2000, 1995, 1989, 1988, 1982. All of those were the years that the harvest was amazing. And if you have an opportunity to get a wine from any of those years, then you can look at a vintage chart. Really easy way to select a wine. That is your best bet, right?
and not to look at an individual wine. Some people say to me, "Oh, Chateauneuf, which vineyards do you like?" I like them all. But if it's a great year, like 98, unfortunately I don't have any more 98s, but 2004, 2006 are also great years. And you look at the vintage charts and see how they rate, and you select your wines.
And is the grape specific to a region? Like, is Chateauneuf specific to?
So in Old World wine, the wine is basically called based on the chateaus, right? So in New World wine, like Australia, it's called based on the grape variety, right? So you'll have a Syrah or a Cabernet Sauvignon. In Old World wine, like France, they'll talk about the territory, right? So Chateauneuf du Pape and Bordeaux, and in Bordeaux there's all kinds of different areas, and they'll talk about wine based on the name of where it was produced as opposed to the grape.
Yeah.
Right? Now Burgundy is also a Old World wine, and all wine from Burgundy is either a Pinot Noir if it's red, or a Chardonnay if it's white. Those are the two grapes that they grow in Pinot Noir. Now, or in Burgundy. Now, what's also interesting is that if you have a white champagne, right, it can be also made from a red grape. Do you know that?
I learn something new every day, Paul.
So if you look at champagne, sometimes you'll see a champagne that'll say Blanc de Blanc.
Yeah.
It's white from white. Well, what the heck does that mean? And it's because when you look at the Pinot Noir grape, it's used in a lot of champagnes, and what they do is they press it very, very lightly, and they don't leave the skin on the wine, and really all juice from grapes is white.
It's the skin that makes
It's
it
the
red.
skin that gives it that color. And some of the deeper wines is just the skins were left in
Got
a little bit more. So we've talked about this all in our previous podcast, but I don't mind updating you guys on.
No, we're caught up now. Don't worry, we're
on that.
we're sommeliers.
Go out and look clever.
There you go. There you go. So, what do you guys think? You think it's
I
time
think
to,
we're sign-off time.
To sign off time?
So
I think.
we are sitting at almost 2 hours.
Oh my
Almost
God!
2
Wow.
hours. Okay.
We got 3 episodes.
We're
man.
at
To be honest,
three
the last
episodes.
question is so loaded that we probably shouldn't do it when you guys are. So.
All right.
No, that was
Good point.
That was a good one. That was a good one.
Okay. So sign off.
Sign off.
So we normally do a sign off where the guests have to get up and dance.
All right.
And
do it.
So,
Yeah. Here it is.
so signing off for our 7th podcast. I'm Paul Barron. Thank you very much, guys. Hopefully we weren't too crazy tonight, but all good. Cheers. I think that the last 2 wines were my
Cheers,
favorites.
guys.
The Chateauneuf.
Cheers.
And
Cheers.
the,
Thanks for having us,
Cheers
guys.
to
Really
Mandetta.
Thank you, gentlemen.
And a
It's
big
been a
thank
pleasure.
you to
Thank you, guys.
CLC, Shuba, and Kendall
Yeah.
for joining us on
And
the
thank you to
podcast
Paul
tonight.
for bringing the wine.
Thank you.
Thank you.
Cheers. Thank you, guys. Cheers.